Good morning, everybody. Welcome back to another episode of the Market Open, the final episode of the Market Open for 2025. We are here. It is the last day, December 31st. Can you believe we have made it an entire year? It's kind of wild. It still hasn't hit me that this is the last day of 2025. That's it. We have this last market open, one more market close, and then we are done for this year. The markets will be closed tomorrow, and we will be live on Friday to open up the markets for 2026, officially January 2nd. But it's kind of crazy that this is our last day. I know we haven't really Santa rallied in the way that people thought we would get to that 7,000 level on the S&P. We do have a chance. I mean, if the S&P wants to go up 2.5% today, which anything's possible, we're going to see if that happens. But if not, still has been an incredible year. And we got a lot of headlines this morning to talk about. You got some Nvidia headlines that's up in the pre-market. You got some China stuff with tariffs on beefs. Of course, the last day of 2025 should be a major headline around the thing that started 2025, which is tariffs. So we'll talk about that. And we will get through the rest of the day as we officially end out 2025. It is kind of crazy, but we are here. And it's time to end out the year. So thank you, everybody, for being here. Good morning, good morning, good morning. Again, we will not be live tomorrow, given the markets are closed. I will be live with Steve tonight for the New Year's Eve stream. So I'll be live on his channel. And for those that are not doing anything on New Year's Eve, we'll be here. And we'll hang out as we get into the end of the year. A couple updates, and then we'll get into all the stuff that we have to talk about. First of all, the internet should be fine today. Hopefully, there shouldn't be any issues. So sorry for the issues that we had yesterday morning, but we should be okay today. Second of all, the official Substack is out for 2026 portfolio strategies, updates, and ideas. There is a summary of 2025 performance, ideas, thoughts, stuff that worked, stuff that didn't, and then updates on strategies and concepts for 2026. We will do a final year to date on the market close today. Essentially, it looks like I'm going to be ending out at 60% year to date, and I talk more about it inside of the Substack, so you can check that out, read it. Again, as always, free to subscribe, no paywall. But on the market close, we'll go more in depth in towards this Substack, ideas, strategies, concepts, thoughts I have for next year. So we're not going to really discuss it on the market open, but during the market close, I think I'll have potentially a couple guests join the market close as well. But if not, we'll go deeper into this on the close itself. So that's what we got. Excited to be here. Thank everybody for being here. Good morning. And let's get into it. So first of all, we have a variety of different macro headlines before we get into even the big news. Let's just start off very simply with gold. I mean, and realistically, silver. The commodities market, once again, is acting like a meme stock, which is kind of crazy. Silver is down, folks, 7.2%. 7.2%. It was up 8.5% yesterday. It was down 11% on Monday. It was up 10.3% on Friday. I don't know what the hell's going on, and I'm sure there's a lot of nuance to this. China's Shanghai markets are opening up, I believe, January 5th in a variety of different sectors, and there's a bunch of different things that are going to happen there when that opens up. But silver is quite literally acting, it's acting like BMNR. It's acting like BMNR. The market does not close early today. The market closes. We have a full-on. The bond market is closed today. So that's why you're probably. Dude, yesterday's S&P 500 trades 75 million shares on average. Yesterday, you had 35 or 34.7 million shares that were traded. I mean, the volume was just gone yesterday. I don't know if the volume's coming back today, but realistically, I think a lot of people, institutional, hedge fund, retail investors, they're just taking the week off. And as a result of that, you just might not see a lot of volatility to the up or downside today because there's not that many people. But the bond markets are closed today. We will have a regular market open, market close. We just might not see any major action, even though we do have some headlines that we'll analyze. S&P 500, as you can see, is up a little bit in the pre-market at 687.3. But silver is down. So look, if you went short silver on Monday, you got burned yesterday. If you waited a day, you're back to break even. If you go short silver this morning, based on the 7% decline, do you get burned again if it reverses 7%? I mean, this stuff is incredibly complicated. I really think there's a lot of other dynamics that are at play. Bitcoin right there trying to get to 89,000. And so once again, my position is to stay on the sidelines and try to analyze what's happening from here without actually taking a directional long or short bet, just because I feel like you missed the trade if you didn't get into it at least a couple months ago, if not a year ago. So profiting on the trade up or down is just tough given how silver is acting. But you do have silver. that is down 5% this morning as this one continues to go down as we end into 2025. So that's the update on silver. Stock market. So we've got a variety of different headlines today, a lot of different macro stuff. I think let's start off with Nvidia. This is why Nvidia is green, and it coincides with the China argument that we've got this morning from a variety of different angles. So first of all, Nvidia has placed an urgent order with TSMC as demand for the H200 in China has surged. Reuters is reporting that Chinese firms have ordered 2 million H200 chips. The demand for chips far exceeds inventory with Nvidia, especially because these chips are the older capacity chips. And the other really interesting thing about this is that once again, China is becoming a potential prominent stream of revenue for Nvidia. TSMC is expected to work on the expanded output in Q2 of 2026. Chinese technology companies have placed orders for more than 2 million H200 chips for Nvidia going into 2026, while Nvidia currently holds just 700,000 of those available chips right now. So what is the implication of this? Obviously, the major implication is that the chip market is now open in China for Nvidia. We had the headline yesterday about Chinese firms forcing tech companies to have half of their manufacturing process sourced and procured through Chinese firms that are local to China when it comes to building chips. So not just procuring the actual chips, but also the raw materials that go into the chips. But the other half, it seems like, is open for the rest of the world to get access to when it comes to Nvidia. Now, for Nvidia, well, they already guided $500 billion in the next 5 quarters. The China revenue was excluded from that guidance. If that China revenue comes back into that guidance, and it's not going to be a massive increase, but a couple billion here or there, as you can see Nvidia right there, 189.64 is pretty damn good for a company that is so scrutinized on every single dollar in terms of the beat and raise on Nvidia. And not only that, you also had ByteDance that came out this morning and said we are trying to spend $14 billion on Nvidia chips. At least that's what our plan is, to spend about $14 billion. And the goal of that $14 billion is particularly around internal chips that they're going to be using for applications and consumer different applications like TikTok. The internal chip unit employs 1,000 engineers, and they are preferring NVIDIA H20-like performance at a lower cost. The company is also investing in high bandwidth memory, which is why Micron got a little bit of a bid yesterday, almost at $300. Micron, again, up in the pre-markets at $293.72. So bullish Nvidia, bullish the broader AI sector, and it doesn't look like that is necessarily slowing down. Before we get deeper into this Nvidia story, real quick as well, we did have jobless claims, kind of a nothing burger, but once again proves the argument that we're probably not getting this rate cut. So jobless claims, these are the amount of people that file for unemployment in the United States of America. The street expected 227,000 people, 220,000 people to file for unemployment. We came in at 199,000. This is nowhere near a recession. Like, for the bears screaming recession, you have a better chance of just like maybe not getting a rate cut to lead to a recession, which it's very possible the lack of rate cuts could lead to a recession, even though the lack of rate cuts also signifies that we're not going to get to a recession, versus unemployment leading to that recession. This number needs to be closer to 350 to 375,000 a week for us to signal a recession. We're just not getting it. So in the midst of the fears of the labor market, which are very real for a variety of reasons, you're not getting that catastrophic headline around the labor market being dissipated. And as you can see right here, probabilities now for a January cut were at 24% last week. They were at 15% yesterday. Today, they're at 13.8% after these jobless claims. So it really doesn't feel like the rate cut is happening in January. And now I do think we will get at least one rate cut next year, probably two, if the sort of internal projections for CPI continue to flatline. But as of now, the labor market is not necessarily helping us to get those rate cuts. Here's the update on Nvidia and the China tech demand that is starting to become a lot more apparent.
Reuters reports Chinese tech companies have ordered more than 2 million of Nvidia's H200 chips for next year at roughly $27,000 per chip. That's according to them. So that would equate to roughly $54 billion in potential demand. Nvidia currently has about 700,000 chips available, meaning the company will need TSMC, Taiwan Semi, to ramp up production starting very, very soon. ByteDance alone, which is the parent of TikTok, is reportedly planning to spend $14 billion on Nvidia chips in 2026. So that could equate to roughly 10% of Nvidia's annual revenue, and this estimated from just one single customer. ByteDance has already built a 1,000-person chip team and developed a chip comparable to Nvidia's 820 chip, which is a lower-tier chip geared to China at a lower cost. But the scale of these orders today shows China still doesn't have domestically produced chips capable of handling large-scale AI training at Nvidia's level, which is good news for Nvidia. There's also a U.S. revenue angle. Nvidia pays, or is supposed to pay, a 25% fee to the U.S. government on China sales. That means roughly $3.5 billion from ByteDance alone, if we take those numbers at face value, potentially more than $13 billion if all 2 million chips ship. For investors, this matters because China revenue has been stripped out of street models. These approvals could drive upward revisions, but the stock isn't celebrating today. Investors have...
Again, it seems like regardless of what the stock is doing, that China demand is real. Overall demand is very real. And no matter how many chips we think are being sold, there's more that need to be sold in order for this data center build out to be complete. And hopefully that cycle takes another 4 or 5 years. And that is your bull case for Nvidia, your bull case for Broadcom, AMD, et cetera. Nvidia right there, 189.64, up about 1.3% in the pre-market. So do we get a 190 close this year or today for Nvidia, which would mark off the year? I think it's very possible with a headline like this. It's a good headline. It wouldn't be a headline that I would necessarily be super excited about or super skeptical about. But it also depends on, is there just volume that comes into the market today? Because obviously over the past couple of days, there really hasn't been that volume. Now, on top of the Nvidia China news that's bullish, you do have some China news that's potentially bearish. So this came out this morning from the Chinese Commerce Ministry. 55% tariffs on beef imports from some countries, including the United States, when shipments exceed specified quota levels starting in 2026. So it's not a flat 55% tariff on beef imports. It's like, hey, if you were going to import 500 tons of beef on the 500, and that's the quota, on the 501st ton of beef, that would be when we have this imposement of 55% tariffs. I don't think it's that big of a deal. It shouldn't be that serious. The market didn't really react to it negatively when the news came out this morning, but it is one thing to think about if the Chinese want to continue engaging in increasing tariffs. But yeah, I doubt the street's going to take it that seriously. So hopefully 2026 is not a story about tariffs, either from an inflation perspective or from a trade war perspective, because we dealt with that story in 2025. And quite frankly, the story got boring after like the 15,000th time we got to hear about tariffs. But maybe that story is done. And quite frankly, the story is not going to be done because the Supreme Court has to make a decision on tariffs pretty soon. And it should be out in the month of January. So once that decision comes out, we might have a little bit more closure on this tariff situation. But as of now, we still don't exactly know what's going to be happening to tariffs. Now, one stock that may benefit if the tariffs are overturned by the Supreme Court is Nike, which is up 3% in the pre-markets. If you bought this bad boy at 58, 59, or even 60, you're probably a bit happy, given you're starting to see some momentum. Why is Nike up 3%? Well, once again, we got another insider buy. It's becoming quite interesting to me on Nike, and I'm trying to figure out why exactly do the insiders keep buying. So this is the CEO, Elliott Hill, once again, $1 million worth of stock. People can say $1 million is not a lot, but at the end of the day, if you're putting $1 million into something that literally will only return if it goes higher, aka a stock, and you are the CEO of the company, you're trying to show some level of I guess, confidence to the market. Tim Cook, another insider, bought $3 million worth of Nike. And the question is, what do these guys know that the broader market might not know? And not even on like an insider trading perspective, just like what do they feel about the morale around the company or the potential turnaround of the company that they've probably signaled, even if they have not explicitly said, that could change things around outside of the brand positioning, the China stuff that's bad. Maybe they're preparing for the Supreme Court decision on tariffs and they're saying, hey, our legal experts have come to the conclusion that there's no way these tariffs are going to stand. Therefore, we want to position ourselves to buy more stock before the tariffs get overturned. A theory I heard yesterday on X, which I think is not a horrible theory, desperation could be one argument, is Steph Curry. I mean, he left Under Armour. If they sign Steph Curry, I think that's bullish. Now, granted, Steph Curry's probably going to retire in a couple of years, so it's not like he's the hottest star in the NBA that's going to carry the brand for the next decade. But, I mean, I do think the stock gets a little bit of a pop if you get some excitement back into the brand with Steph Curry. So maybe that's something that people are thinking about. But I don't know. It's interesting. 3% divvy. Stock's probably closer to the bottom definitely closer to the bottom than to the top. And it's not like they had a horrible earnings. They just had some headwinds in certain parts of the business. If you're willing to wait a year or two to see that stuff turn around, maybe this is a capital appreciation play going into 2026. So I guess we're going to see, but that is one argument for why Nike might be higher. Yeah, I mean, Sydney Sweeney might be the golden ticket to make this play out. Where is American Eagle? American Eagle, yeah, dude, American Eagle is going to end out the year up 100%. I mean, I don't know if they would actually sign her, but if they do, who knows if that gets people excited. 55% for American Eagle. Not bad. 55% for American Eagle. To be honest, a lot of the Mag 7 outside of Google simply underperformed. JP Morgan was up 35% for the year. Goldman Sachs was up 60%. Citigroup was up 60%. American Eagle was up 55%. You had a lot of different stocks outperform the Mag 7 outside of Google. And which just means there was alpha to find across the entire world, literally across the entire world, because America's stock market underperformed pretty much every other index across the world. But it was a stock picker's market, and there was a lot of momentum for different stocks in this market. Warren Buffett today, this will be his final day as the CEO and president of Berkshire Hathaway. It is kind of crazy that we are going to have a stock market that does not include the shareholder meetings, investment decisions, and letters, annual letters by Mr. Warren Buffett. 503.71 is what you have on Berkshire Hathaway. Let me pull up the stat that I saw yesterday for Berkshire, but it was something like he started in 1960, and the price of Berkshire was $35 a share or $60 a share, and it is massively compounded since something like 35 or 3 million%. I mean, it's just he's one of the goats. He is one of the goats. One could argue he is the goat. And although he was not a tech-heavy investor because he spent the first 40 years in a market that really didn't have technology, he was able to latch on to some of the tech names towards the end of his career, including Apple, which allowed him to compound at 19%, I think, for his entire career. And when he compares to the S&P 500 from that same time, it's about 10%. So, I mean, it is incredible. It is absolutely freaking incredible for him to beat the S&P 500 for the past 50 years by 100%. I mean, that's just not easy to do. And even if people disagree on how he did it, the point is he did it. And this will be his final day as the CEO. Now, Berkshire has about $400 billion in cash. If I'm the new president of Berkshire with $400 billion cash, and I've got the ability to make investment decisions, I mean, Bitcoin's down a lot. I mean, it's a lot of stocks that Tesla might be one of the best companies in the world in the next decade. I'm obviously playing here, but like, it is kind of crazy to have just like 400 billion sitting there being like, what do I do with this? What do I do? Ethereum, right? That shit's not moving. Maybe that, it's Greg Abel would never do anything crazy like that, but we also didn't think he would buy Google. I mean, who realistically thought they were going to put 5 billion into Google? Now, Bitcoin is probably a bit of a stretch, but still, they've got money. And maybe that money can actually be put into something strong. Yeah, I mean, look, it's not crazy for them to put it into Meta either. I saw a stat yesterday about Meta. Meta's EPS growth was 70% over the past couple of years. Their PE is the same since 2023. And it would have been higher outside of the fall that it had from 750 after those earnings. I mean, I think Meta should be a strong winner going into 2026. It's just they have to justify what they're doing with all their CapEx. I looked a little bit deeper into Manus AI yesterday, the $2 billion acquisition they did. From my research, Manus AI is a B2B AI company. It's one of those platforms where enterprises were using it to automate workflows, to like say, hey, I have 500 leads, go find me their emails, be able to send this automated message to them, book meetings. Yeah, it was like very B2B, not consumer-oriented workflows, but I guess Meta is seeing something agentic inside of that infrastructure that they want to put within Facebook and Instagram, which again, I think that is the gold of what AI is going to be like. If it can actually do stuff for us on a day-to-day basis and we don't have those AI personal assistants actually operating at the level that we need them to operate to be, one could argue, more productive, or even to pay a lot more money per month for these products, maybe Meta is going to figure that out. So I actually am really bullish on this acquisition. I mean, $2 billion is nothing to Zucks, and that $2 billion should probably create a better like mapping for their ROI on CapEx versus all the data center stuff that they spent on, because all that's just going back to advertising, which again is fueling the business, but it's not what the street wants to see. The street wants to see something outside of advertising. And maybe Manus is going to be able to help them get there. Bitcoin right there, 88.9. Micron's up a little bit. And then Nvidia on that China headline for more chip demand, that's up 1.16% in the pre-markets. Amit, did you see the last BMNR video that Tom Lee did? It was kind of a disaster. I'm a long-term holder of BMNR. I can say this was awful. Yeah, we watched it yesterday on the market open. Steve called me last night. And his wife was pissed off because apparently BMNR sent like the voting for the shareholder proxy or whatever to his house. And so he's on speakerphone and his wife is like, Amit, why the fuck are these guys sending me letters to my house? And I start dying. I'm like, honestly, I don't know either. And Steve's just like, dude, what is going on? Like, how desperate are they to get these freaking votes? And I was like, dude, I don't know. So I agree. The video was weird too, because the video was like not him explaining why you should vote yes to everything. It was just him saying like, vote yes to everything. And then he's like telling you how to vote yes, but he's not explaining why you should be voting yes, which again, they can't force you to vote a certain way, but they can recommend, or like Elon has explained why you should vote for his compensation package. So Bitmine, Tom Lee can explain why you should vote for whatever dilution, but it was no explanation. It was just like vote, vote, vote. And then they're sending you all these freaking text messages, which is obviously very annoying. So yeah, sentiment on BMNR is not strong right now. It's definitely not strong on Tom Lee. All of this is forgiven if ETH goes higher, but the broader question is, we've analyzed this to death at this point. Do we get a crypto winter going into 2026? Because if we do, I think that controls more for Ethereum versus the actual fundamental narrative around stablecoin, tokenization, et cetera, going into next year. And obviously that impacts Bitcoin, MicroStrategy, et cetera. So we're going to see. We're going to see what happens, but a lot of this is contingent on Ethereum. Speaking of crypto, let's talk about Robinhood yesterday. So Robinhood fell after hours, and the reason it fell, which was the exact reason I have been worried about, and at least December's data is proving some of these fears to be true, trading volumes are going down a bit. So this was their December 1st to December 28th month-to-date trading volumes. And as you can see right here, equities at 170 billion, significantly lower than November and October. Options contracts was at 179, significantly lower than November. Crypto's at 19 billion. That makes up a lot of their high margin revenue. That was much lower. And then event contracts, 2.6 billion. November was 3 billion. That's still good. $26 million of revenue. But is that enough to overcome the lack of crypto trading volumes? So I wrote about it in the Substack. The simple thesis on the hedge on Hood is, at the end of the day, this company is at the whim of the market. For now, in 10 years, I think they're going to be a very highly diversified business that's not going to have to be contingent on if the market goes up or down. But right now, they're still a baby in the public markets. They went public 4 or 5 years ago, and they've grown tremendously because we've had a massive 3-year bull market. That doesn't mean they have to go down 70, 80%, but that also means they don't have to go up another 200% like they did this year if next year doesn't have the level of trading and volatility that is necessary for a company like Robinhood to really thrive. And I believe Vlad over the next year is going to put out a ton of different products that are independent of the market, which is something that he's already started to do this year. It's just that's where they get their revenue from right now. And so we have to be honest about that. And it looks like that December volume already showed that the volumes are just not that strong. So, I mean, Hood fell to 114. Where is it at right now? It's at 115.75. First day in about a week, it closed below 116. 116 was kind of that bottom over the past couple of weeks. And so that's, I think, the main thing to watch out for going into 2026. So that's what we have with Hoodie. Again, silver's down 5%. Bitcoin right there just below 89. HIMS, this one continues to get hit, fell 3% yesterday. Rocket Lab, wow, up another 2% in the pre-markets. You talk about high beta growth that has a massive catalyst. SpaceX, the IPO, along with Neutron, are the number 1 and 2 catalysts, and Rocket Lab maintaining its level. ASTS also pumped a little bit yesterday at 7%, 4%, up 1.49%. in the pre-markets. Let's do the red or green poll in the chat and see what people are thinking. Again, the main macro data we got this morning was jobless claims. Jobless claims came in at 199,020 expected. Once again, proving that a rate cut feels unlikely, at least in January. And we got 1 day left, folks. 1 day. 1 day left to end out this year. Yeah, the Santa Claus rally did not happen. Well, we still have this 1 day, though. We've got this one freaking day to see it. But again, like we were talking about this last night on the market close, like if we get to 7,000, if we get to 690, it's irrelevant. Like we've all had a very strong year, even if you didn't have a year that was as good as it was back in October. But that's okay. That's the nature of how the market works. We learn a lot of lessons from that, but it's not something to be, I think, ungrateful for this year. Now, who did have a good year? The billionaires. So Bloomberg did a cover story article this morning on the billionaires and the amount of money that they've added to their net worth in 2025 alone. And the headline is 2.2 trillion. 2.2 trillion from the billionaire class in 2025. Some specifics on this. Larry Ellison added 57 billion. Elon Musk added 190 billion. Elon's at 622 total. Larry Ellison's at 250 total. And then Gina Reinhart, who I don't know who she is. I feel like I should. Gina Reinhart, Australian billionaire. She's the chairwoman of Hancock Prospecting, a privately owned mineral exploration and extraction company. Her net worth is 37 billion. She added 12.6 billion. Donnie T's net worth is 6.8 billion. He was the poorest out of all the billionaires. He only added 282 million to his net worth this year, which you would think he added more, but 282 million. Speaking of Donnie T, we got this update, which I don't even know how to make sense of, but this is the update. Trump Media today announces a plan to distribute a new digital token to DJT shareholders in partnership with Crypto.com using the Kronos blockchain for speed and interoperability. The company said each ultimate beneficial owner will likely be able to receive 1 token per whole share as specified. And the announcement states that the tokens are not expected to represent ownership or entitlement to profits from managerial efforts. It's not unheard of to use a proxy level of ownership to then distribute something else to a quote unquote shareholder. I mean, the concept is very similar to airdrops. And I think this quite frankly might literally be an airdrop. But I wonder what the utility of that new digital token is going to be in partnership with Crypto.com if you own a share of DJT. Like if you own a share of DJT, your job is, your goal is for DJT stock to go up. If you get a token that's associated with that, is the token supposed to go up as well? Is it essentially like a proxy to the share price? And is there utility to that token? I'm not sure. But that is what you have there from Mr. DJT. But yeah, the billionaires added a lot of money. The billionaires added a lot of money this year. The meme coin, I think we forget about the Trump. Where's the Trump meme? We haven't looked at that price. That happened early this year. That started off this entire year. That is at now $4.91. It's still worth almost $1 billion. Melania, I think, is like worth like 5 cents or something. But at one point it was worth $80. So yeah, the Trump meme coin is not necessarily worked out. So there you go. What is everyone's thoughts on this year? If you had to define the year in a sentence, a couple words, how would you define 2025? We'll talk more about this on the market close, but I mean, how are we feeling on the last day? Are we feeling grateful, excited, sad, nervous? Because I'm feeling a lot of, I slept at 10 p.m. I woke up at 3:30. I got so much work done this morning. I really wish that in 2026 that can turn into a routine, sleeping at 10, waking up by 4, because I've been up for the past 5 hours and I just got a lot of shit done. And I feel like I'm just happier on the days where I wake up early and I get stuff done. But trying to carry that into 2026 as well. See a lot of gratitude. Zokold says motivated, positive, great, nice and volatile. It has been a volatile year, even though I showed you guys that stat a couple of days ago that the volatility index is below its historical average in 2025, which is crazy because it felt like 2025 was pretty damn volatile. By the way, here's the chart. If you invested $100 in 1964, Berkshire Hathaway would have given you $5.5 million on a return. S&P 500 would have given you $39,000. And Mr. Buffett was leading Berkshire for the past 6 decades. So pretty incredible stuff from Mr. Warren Buffett. All right, I'm seeing a lot of optimism. A lot of optimism. We got to be grateful. We gotta be grateful. No matter how annoyed we are at 1 or 2 picks not working out, no matter how annoyed we are at, the portfolio not being at a certain level, like we've got to be grateful. I think it really goes back to also the argument of we are all spoiled, no matter how old we are, even if you've lived through some pretty ugly markets. I mean, when the past 3 years normalizes 20% on the S&P, which again is not normal, the historical average is 10%. So you're getting a lot more than you're supposed to get. And there's good reason for that, right? AI, the rate cutting cycle. There's just so many arguments you can get into, but the point is it's not normal. And the returns that you probably have this year are not normal because the market's not normal. So even if they're not some incredible, crazy returns, I think every penny that we have as a return should be met with gratitude. At the same time as I'm saying that, I have Michael Saylor's tweet notifications on. At the same time I'm talking about gratitude, Michael Saylor tweets, this is the shit that makes people not feel that grateful for MicroStrategy stock, at least. Did you end the year with more Bitcoin than you started with? Now, look, there's nothing wrong with Saylor tweeting that. It's just, obviously, a lot of people are a bit annoyed at him, Tom Lee. It's like, I gotta feel bad for them, bro, because they're just dealing with all this hate. And Burry's trying to post AI slop to try to make people feel happy about Bitcoin. He's actually really good at these AI prompts with these orange Bitcoin pictures, but it is what it is. Crypto just didn't work out. It didn't work out. That's okay. That's all right. If you have a long-term fundamental thesis, then you move on from it and you probably continue to allocate versus get super scared about it. So if anyone was super crypto oriented this year or crypto leveraged this year, those plays likely didn't work out. I think the only one out of those plays that really worked out was Hood because it's not directly just crypto. But outside of that, BM&R, MicroStrategy, Coinbase. Well, Coinbase, how much is Coinbase year to date? Coinbase did work out if you bought at the right time. Coin year to date. No, it didn't. Wow, down 9%. I feel a little vindicated on the Hood coin debate from 2 years ago. I mean, like, if this is not an example of you need a business to have other elements than just crypto, at least in a fintech, I don't know what is. So yeah, at least if you had Hood, it wasn't necessarily like that. But this is when hopefully sentiment tends to be the worst on these crypto names, and the next year they can come back to life. All right, we got 10 minutes until the market opens. What is everyone doing today, by the way? Are people at work? Do people have the day off? If you're in corporate, do you get New Year's Eve off? I feel like you do. I feel like you get you definitely get New Year's Day off. I feel like you get New Year's Eve off. So let me know if people are in work, they're spending time with your family, friends. But this is the final day for the market open for 2025. I don't know, everyone's still working. Some people have half days. Some people took a day off. Steve took a day off yesterday. Yeah, not in retail. That's true. Not in retail. Laura says, I have today and tomorrow off. Working in banking, sitting in the office, at work in the fire department. Working. All right, everyone's working. All right, so we're all working. We are working as we end out 2025. Wait, so New Year's Eve is going to be different for a lot of people because if you're watching from somewhere else, your New Year's might be closer or farther away. But at least for me in the next 12 hours, we will be in 2026. Okay, so a couple macro charts and then we'll get into this market open. So first of all, going back to silver, retail investors once again having some euphoria in silver. The largest physical backed silver ETFs, including SLV holdings, are up to 16,390 tons, the highest since July of 2022. Overall, total known ETFs of silver stand at 24,551, the highest since June of 2022, after rising 4,933 tons since February. Now, all of this demand into physical silver has led to the CME yesterday night to once again increase margins. So this was at about 8 p.m. last night, 8:30 p.m. This is the third time First was December 12th. The next time was last week. And then the third is this time, that they are increasing margin requirements. Quite frankly, this could be one of the reasons for why silver is down 5%. Back in 2011, they did it 5 times. And on those 5 times, you ended up getting a 40% decline in silver. Now, we have a lot of different market dynamics than we had back then, but this is the 3rd time in less than 30 days that they are increasing the margin requirements. And so we're going to have to see if those margin requirements actually lead to a potential less demand going into, or not less demand, but deleveraging out of silver. And so that's one thing we're going to have to look at going into this year as well. Here's another chart that I thought was interesting that sums up some of the price increases we've seen in 2025 and over the past 5 years. The prices of basic necessities have seen a historic surge in the United States. And this shows you some of the things that have increased the most. So this is all since November 2019 as an aggregate percent change in the US Consumer Price Index, or CPI. Since 2019, motor vehicle insurance is up 56% over the past 5 years, which makes sense because car prices have gone up a lot as well, including used car prices. But vehicle insurance, that's up 56%. Motor vehicle maintenance is up 48%. Coffee is up 46%. Electricity is up 40%. And I think that number is only going higher with data centers. Meat and poultry is up 38%. Food away from home, 34%. Used cars up 33%. Bread is up 29%. Rents are up 30%, although they are declining as per the past couple months, which is good for CPI. But rents in general are up 30% over the past 5 years. And then housekeeping supply is up 26%. So, I mean, the world has obviously gotten more expensive over time. And this affordability narrative is something that the White House is going to have to be fighting very strongly going into the midterm election year. But it is something that we can't necessarily forget. And again, I'm just reading a lot more analysis and seeing a lot more people talk about the historical cycle for midterm years. It's just not good. It's just not like there's no way to deny it when you look at the numbers. Take a look at this new chart right here. Every market cycle has found midterm election years with the least amount of cumulative, why is that word so hard? Cumulative equity ETF flows. We can't end out the year without messing up another word. It's only right for the last market open this year. We had $1 trillion in 2024 in ETF flows. We had 1.2 trillion this year. We're going to end at about 1.2 trillion. If you look at the midterm years, it's the worst out of a 4-year cycle. It's the worst out of a 4-year cycle. So I am just really curious to see midterm 2026, what happens with foreign assets, what happens with domestic assets, what happens with the overall cumulative money that's coming into the equity funds. Remember, money market funds, we are sitting at 7.6 trillion still. I mean, one could argue, in 2022, we did not have 7 trillion on the sidelines. If even a couple $100 billion leaves those 7 trillion on the sidelines and goes into the equity markets, that would be a massive amount of money flowing in. It maybe needs a correction to get there, to get excited for people to take money out of those funds. But 2026 has that midterm legacy on top of it. And we're going to see if it actually impacts the broader market. Dude, why is this such a hard word? Cumulative. It's a weird word, bro. It's not a word you say often. Cumulative. Call me, Curtis says, Amit, I'm in the office at 5 a.m. and I'm working my ass off. End of year push. I love it. Really, there is something beautiful, something spiritual about waking up in the morning and getting shit done before the day even starts. And like, I tend to wake up early, but not the type of early. Like 7 a.m. to me is not early. 5 a.m., 4 a.m. and having those 3 hours of grinding before you actually have to like get into your real routine, it just makes you feel so much more productive. And that's definitely a resolution I have going into next year. But that means you have to sleep on time. And that's the other big issue. Like, I've been horrible with my sleep schedule. So next year I'm going to try to hopefully be able to sleep on time. Bro, try saying my name. That's the real challenge. Parasajanki. It's so bad because it's definitely an Indian name. And I just like, I should be better at saying this shit. But I'm so bad. I am so bad. Ethereum right there at 3,008. 5 minutes until the market opens. Fets, thank you for the $20 super chat. Happy New Year to you and your family, Amit. Happy New Year's to the community as well. Everyone be safe and please don't drink and drive. Fets, thank you for the super chat. And yes, definitely a great thing to remember on New Year's Eve, which is please do not drink and drive. If you do drink, just call an Uber, call Lyft, so that we don't have too many accidents. I mean, I think there's statistically, New Year's Eve is one of the largest days of the year of drunk driving accidents. And so mitigating that to an extent would be important. And a lot of that stuff happens in New York, dude. Like, I've never understood the idea of going to New York and watching a ball drop and then being like, Happy New Year. Like, everyone's drunk. It's crowded. You have to get there 10 hours early and literally stand there in the freezing cold in New York City for 10 hours just to watch a ball drop. Like, I've never understood. I've lived near New York my whole life, and I've never been excited to be like, yeah, that's the thing I want to do on New Year's Eve. It's like, no, I'd rather just like not stand in the cold for 10 hours. But that is something that a lot of people do like to do. We have a new Trump tweet 3 minutes before the market opens. Tim Walz of Minnesota is a crooked governor. That's your tweet. Of course, we're not charged. I thought I might be charged today. Nope. This phone is just never charged. Tim Walz of Minnesota is a crooked governor. I wonder what his final post is going to be for the end of the year. I really do wonder what he's going to say for the end of the year. But that is one of his final 2025 posts. All right, folks, here we go. We got 3 minutes. Let's see how this plays out. Let's see if we get any volume. If we don't get any volume, it's going to be relatively flat, and that's going to be the end of the year. Again, I did put out my 2026 portfolio strategy updates and ideas, lots and lots and lots of different thoughts going into 2026, positioning, hedging, 2025 recap, etc. So you can check it out right there. Give it a read whenever you have time. A couple stocks I'm interested in that I didn't write in the Substack that literally over the past like 48 hours, I've been looking at a little bit more. One is just like super random. The thought I just had, Intel. Just randomly, like I've not done any fundamental due diligence, but I just kind of thought about it. I'm like, Trump and Jensen are loaded up to the tune of almost $20 billion in this company. Are they really not going to let it work next year? Especially in a world where domestic manufacturing in the United States is really important, at least to the Trump administration and to Jensen. And that's why Amcor has been a big winner. But like, I don't know. They're sitting on about $10 billion of gains between both of them, Trump and Nvidia. Do they really let that dissipate for Nvidia's lack of execution? So maybe, or Intel's lack of execution. So maybe Intel is one of those names to look into. I know I missed the run. It's up 80% this year. So, there's going to have to be a compelling thesis there, but that's one name I'm looking at. Even if it's just a small position on the bet that Trump and Jensen are going to keep this propped up. And then second is Transmedics, TMDX. So I was talking to a friend last night that I really trust when it comes to numbers. He works in private equity and he understands valuation models really well. He thinks this thing should be a $200 stock. This is organ delivery. For those that don't know, they transport organs for people that need life-saving surgeries. And there's not that many companies that do it. It's $4 billion stock. It is one of those retail faves that was more exciting in 2024, has kind of died down in terms of the excitement that it has. But the numbers look really compelling. So Transmedics is one of the names I'll be looking at. Intel, it's kind of just more intuition there. So, but I will see if there's any fundamental thesis. But lots of names going into 2026 that we should be exploring. And we'll see if any of them turn into actual positions. All right, here we go. 9:30 a.m. Thank you, everybody, for being here. Wednesday, December 31st. For the last time in 2025, the stock market is now open. All right, wake your ass up. Let's get into it. Nvidia opens green. Nvidia opens green on that headline that Chinese companies want to buy more of their chips. That is up $189.82, up about 1.12% as we get into the market open. S&P 500 is flat at 687, but green, 687.22. Again, volume was severely lacking yesterday. We'll see if that volume comes in today. If it doesn't, probably going to be a boring day, but if we do get some volume, maybe we get some excitement. Rock Lab right there, 72. That's up 2.29%. Tessie, 454, has had a pretty ugly week, down about 10%. But Tesla stock right there up a little bit. Goldman Sachs is green. JP Morgan is green. IWM, which has underperformed the S&P 500. So for everyone who's like long small caps, you've had to be long specific small caps, because if not, like the IWM has not lived up to essentially the Mag 7, even though people feel there's alpha in their earnings growth, which there is, but the Mag 7 have outperformed. So IWM right there, 247. That is flat on the day. MicroStrategy 155. That is flat. Palantir 181. That's up a little bit on the day. Grab 505. That's down 0.39%. SoFi 2679. This was at $28 on Monday. It is now at 2680. That one's up a little bit as we get into the market open. CleanSpark's up 1%. Marathon's up a little bit. Galaxy Digital up 0.5%. TeraWolf up 5.82%. Nebius, is that one green? With the data center plays, that one is green, up about 1% at 86. Iran 3862, that's up 0.84%. Ondas, another drone company, that's up 4% at 937. Robinhood down 0.33 on a little bit of the December volumes being lighter than expected. BM Argo's green at 2780. Berkshire's flat on the day. Ethereum just above 3,000. Nvidia, we got 190. We got 190 on Nvidia. What about Tesla? Boom, 453. Wow, 458 to 453 within literally a minute. That one goes down. So Tesla opens down about 0.5%, down 0.3%. Meta, again, the acquisition they did yesterday, the more I read into it, the more I am bullish that they spent that $2 billion on that versus just hiring another random researcher. So I think that should be good. Did touch 670 yesterday. That one is down. But Nvidia, she's getting 190. She's getting 190. We'll see if that one can actually continue moving towards the end of the day. How about AMD? 216. Okay. AMD and Nvidia working together, getting some momentum and a little bit of excitement as it's making a move. What happened to Tesla? Honestly, I'm not sure. This whole week has been weird for it. It started the week at 480, and then every day it just fell 2 or 3%. Yesterday, another 3%. I don't know. I mean, the one thing you could say is that the valuation's up there, but like, is it really just trading on valuation? I guess one thing you'd also point to is that the delivery numbers coming out on Friday, and Tesla has officially open sourced their own internal projections for deliveries. Oh, Michael Burry did say Tesla is grossly overvalued this morning as well. So, I mean, maybe people are selling because Michael Burry officially tweeted that he thinks Tesla's overvalued. But Tesla put out their internal metrics, and they are not the same as the street metrics for deliveries. So maybe people are saying that the delivery is going to come in lower because Tesla's trying to juice up the numbers a little bit. Not in a malign way. It's just like they have their own internal projections versus Wall Street. So maybe that could be an argument, but the Michael Burry tweet potentially influencing a lot of people as well, maybe. Nebius right there, that's up 1.26. Iren's up 1.4. Ondas up 6%. That one getting a little bit more love. How about Bloom Energy? That one is flat on the day. ASTS is down. Rock Lab still up about 1%. Now, he's not short. He did clarify that he is not short. But he is saying that it's grossly overvalued. See, here's the thing about Tesla and a lot of these other names that are trading at incredibly high multiples. If you think, if you play it out hypothetically, that 2026 is a bad year, those names get hit the worst, right? That's the issue. Like they get hit really bad. Like we're not just talking about 10, 20%. We're talking about 30, 40, 50, 60% drawdowns if the overall year gets bad. So if you're buying a name like that, putting net new capital into it, even a name like Amazon, now I don't think Amazon's going to fall as bad as Tesla if it's a bad year, but Amazon's still going to get hit. Those names get hurt. So you have to ask yourself, do you want to wait until you see how the year plays out, or do you want to take the risk in case the year ends up being super bullish because those names are also going to run like crazy, but they're not trading at multiples that are easy to digest if we get some downside action. And I think that could be the simple logic for why people are maybe taking profits or thinking of taking profits going into the beginning of 2026. Martin says Tesla has no serious catalyst till April. Yeah, I mean, that is also fair. Again, now Elon can surprise us if they actually have any updates on Optimus or Robotaxi starts scaling in a meaningful way. But until then, I would agree. There's going to be a few months without like any meaningful catalyst. Zeta right there, 2070. Zeta's doing a good job holding the 20s. We hit 2130 yesterday. If it's potentially normalizing the 20s after a couple months, that would be really nice. So $20.74, we're seeing a lot more volume come in, and you're seeing a lot more dips get bought immediately when that stock gets hit. Rivian right there, 1961. D-Wave, that's up 1.8%. Quantum getting some momentum, and then TSM getting a bid off of the Nvidia increased purchases of 2 million H200 chips. Right now, Nvidia has 700,000 in capacity. So that should be more orders for TSMC. Mick, could you go over your deep in the money covered call strategy? Aren't you afraid of losing your share count on your long-term plays, i.e. 10-year time horizon? So again, I go deeper into the Substack, and I spend a really long time explaining the strategy itself. But again, it's on a portion of the position. It's not the entire position. So that also means that if some shares get called away, they get called away. Like, it is what it is, right? At some point, you have to be okay with some of your shares going away, as long as you want to keep the certain amount of shares that you want to keep for the next 10 years. But I think that the trade-off of being able to sleep well at night, knowing that I'm in a super volatile name like a Robinhood, and that volatility can go against me just like it went for me. It's great when it goes for me, but when it goes against me, who am I to blame? I can't blame Vlad. I can't blame Steve. I can't blame the chat. I can't blame my mom. I literally have to blame myself. And so if I don't take action to protect myself when that happens, which means, yes, you have to sacrifice some of the extreme upside, which, by the way, the stock's at 130 billion. So you did the hard part about buying it when there was extreme upside. Now there should be extreme upside, but it might not be in 2026. It might be in 2036, which is okay, because that gives you time to protect and consolidate the gains that you have. Then I've got to be responsible for it. And I think that's the same thing for BM&R. That's the same thing for a SoFi, the same thing for a Rocket Lab. Like, anything you're super deep in, you either swallow the volatility up or down and you just ride with it, which is basically what I've been doing over the past couple of years, basically what all of us have been doing over the past couple of years, or you hedge a little bit. But it ultimately comes down to a very personal decision, which is what I tried to talk about a lot in the Substack. Nvidia right there, 189, losing 190. So you got a flipped going red, 190.50 to 189.09. Still up about 1%. Amit sister is going to blame Amit. I have hedged my entire sister's portfolio, the entire thing. I actually didn't talk about this. It's a good thing to talk about. So my sister's getting ready to buy a house, and like, she's like very seriously getting ready to buy a house, like pretty serious, like, in the next coming month, potentially she's closing on a deal. So she is up massively on Nvidia, Hood, and Palantir. Realistically, Hood and Palantir have been the majority of her portfolio the past couple of years. And now she's diversified a little bit more from that. But I've hedged her entire portfolio. So all three of those stocks could take 50 to 60% drawdown. She's not going to feel anything, which means she's going to be selling a lot of shares via this covered call strategy early 2027. But that's okay, because A, she wants to get a house and she'll have some cash to be able to do that. B, she bought these stocks. She bought Palantir at 20. She bought Hood at 15. Like, at some point, she's going to also need to take some profits. So for her, I mean, the one thing I could not handle is if, like, we do get an ugly year next year, and then a lot of the gains that she's had that she doesn't even know about, right? Like, she doesn't like really even understand what has happened. I do not want to see them disappear for her. So for her, if she has to sell at these prices after buying 10x ago, that's totally fine. But yeah, she is really serious about buying a house. And so that's one of the other reasons that I've hedged for her as well. Venture Global, that's flat, 701. Poor mom, she's losing you both. Yeah, dude, my mom is definitely, I think my sister's moving up pretty soon. So she's going to be losing both of us. Nike right there, 62.40. That's up 2% again on that big insider sell or insider buy. So that one is getting some momentum. Nvidia 188.92, that's up 0.74, and then Ethereum 29.50. The thing about my sister, she's not really emotionally tied to a lot of these stocks. She doesn't care. So if she sells Nvidia, it's like, okay, cool, whatever. Like, she doesn't really give a shit. So for her, it's more so a perspective of diversifying into the other lifestyle assets that she wants to buy versus keeping these names for a long time. Can you call Warren Buffett and ask him to buy VG stock as his last trade? You know, VG seems like a perfect candidate for Berkshire to get into. Like, it does seem like they love oil and gas. You're talking about real upside here with VG. It pays a dividend. It would not be crazy if Greg Abel says, look, we got $500 billion in cash. Stock's down 70% from IPO. Maybe we take a little bit of a swing at Mr. VG. So we're going to see. Mid, how do you feel about income investing as a percentage of your portfolio? So I talked about that in the Substack as well. I'm more interested in option selling as a way to generate income versus purely using fixed income strategies or dividend investing to get that income. Simply because I still think there's more upside in stocks that you're able to sell premium against. And that premium ends up being a little bit better than the returns you can get from like a Verizon that's 6% per year, especially if you can get like 1% a month on SoFi covered calls. Now, I am a fan of those names. It's just look, I'm interested in hedging, but I'm not interested in having a boring portfolio. Like I'm still relatively young to the point where I don't think I need to be full port Verizon over the next 20 years. So I think it is a strategy, but it obviously does depend, I think, more on your age versus anything else. But I like option selling as a better form of generating income if the goal from that portion of the portfolio is to get income. Where is the 10-year? Are we green or red on the 10-year? The 10-year 4.14. Okay, so that one's up. CNBC's breaking headline, S&P 500 opens little changed. They legit have a red breaking headline at the top of the website. S&P 500 opens little. That's how you know nothing's happening, bro. That's how you look at this shit. That's how you know it's a slow news day. That's their breaking. I legit thought before I scrolled up because I saw the breaking there was going to be some actual news. That's their news. It is what it is. It doesn't look like we're getting that massive Santa rally here. But again, still not a horrible year. Still not a horrible year. Breaking news, nothing changed. Yeah, nothing changed. Nebius goes red. Tesla up a little bit. Iran up a little bit. Rocket Lab losing 72, back at 70. Where is Palantir? Palantir 179. That was at 194 last week. So Palantir has taken a little bit of a hit down to the 179 level. Tesla right there, 454. ASTS, that goes red. Robinhood goes red, 114.30. Meta goes red. BM&R actually green. Berkshire's green. And then Micron also going red. What's your biggest realized loser, biggest realized winner? I would say biggest realized winner are the hood options. Yeah, January. The hood options, the $25 strikes, those were the biggest winners. In terms of just like net dollar winners. There's been other, little trades throughout the entire year. Like I made 3,000 on SMCI in February on a little trade, but like I think that was the biggest like actual dollar realized winner. Biggest loser I think was not necessarily a loser. I guess Misty was one of the losers this year. The two biggest losers are BM&R in terms of the lack of upside movement. Average is 42, stocks at 28, so I'm down on that. But I would say it's more so Grab, which is the biggest loser, because that capital just could have been put somewhere else, could have literally been put in the S&P 500 and done even better than what it's done. Now, my conviction on Grab has not changed even one iota. Like I really do think this is a game of patience and it's going to take time. Ironically, patience is the hardest thing to have in this game, but once it has its move, it is like the other thing about Grab too is now it's gained a lot of excitement, just like overall from the broader investing community. And yes, Tesla it was the biggest opportunity cost, more so than the biggest loser. But when it runs, these are all the analyst projections. All of them have a 40% up. Like they all know this thing is undervalued. It just hasn't moved yet. When it does make its move, everyone's going to be like, all right, this is the moment. It's realistically got to break $7 for people to be like, okay, this is the moment. Like it's having its breakout. I don't know if that happens next year. I am confident that they have the growth and the metrics to be able to do that. But if we got to call a spade, if I put that money into literally like the S&P, that would have done better. If I put it into Iran at $10, that would have done better. So it's like, I think that was the biggest opportunity cost. But in the chat, what was your biggest loser, biggest winner, biggest opportunity cost? I would say biggest loser is BM&R, biggest winner was those hood options, and then biggest opportunity cost was Grab. Also, another big winner was Nvidia. And the reason it's a big winner is because I bought it at 139 in January without even knowing realistically like the Nvidia thesis. Like I understood Nvidia, but I didn't really get the Nvidia thesis. And then a week later, not even a week later, I think it was like 3 days later, DeepSeek happens. And so I was forced to DCA on either cut the position or DCA. And it ended up becoming a 5-month DCA that led to a $120 average on a decent amount of shares, which has led to a pretty massive winner this year for Nvidia. So I would say that's been strong as well. Wow, everyone's with BM&R. BM&R, SBET, Misty, Trade Desk. That was an ugly one. That one just happened to not work out this year. Biggest winner I'm seeing for people, SoFi or Palantir. TSSI and BM&R. I'm seeing pretty much everyone say BM&R, to be honest, or at least something crypto derivative. HIMS. Well, HIMS is still up 30% this year, which is the problem is HIMS again down 1%. We just got into it at 60. I bought at 55 and I sold half the position at 58 and half the position. Remember that day it bounced up to 62? What day was this? Was the day that I started the market close saying I sold some HIMS. And I think that was like August, early August. So I got out unscathed, but I am really grateful that I got out of it because obviously this thing got just collapsed. And, you know, I think it still has a Netflix of healthcare thesis. It's just that thesis was not exciting. I also got in at 28. I sold it like 10 hours later when it jumped to 40. So it's like, it was one of those stocks I was in and out of. And I never really had a concrete thesis on it. But then I took that money and put it into BMNR, and then BMNR got hit anyway. So it's not like the winner was necessarily saved. AMD was a massive winner for a lot of people. Micron was a massive winner for a lot of people. AMD, I mean, I know a lot of you guys loaded up AMD below 100. This is one that you just kept DCAing into. Quantum was a big thing for a lot of people. I mean, D-Wave is going to end out the year at what, 250, 175%. It was at 42 at one point, now at 26, 175%. I mean, regardless of if you hate quantum, love quantum, short quantum, like this one worked. Like numbers don't lie. You can hate the thesis, hate the stock, but numbers do not lie. 175%. If you loaded anywhere below 26, you've made money. D-Wave, Rocket Lab, Palantir. Oracle was a nightmare. Well, Oracle was, when did you get in? Because in April, if you got in at 130, Oracle's still incredible, especially if you got to sell a little bit, at least in the mid 200s. But if you bought after they pumped this thing, like this one literally felt like a real pump and dump. Like they show this OpenAI nonsense $300 billion RPO. Stock goes to 350 from 220 in a day. Talking about 35% move in a day on an $800 billion company. And then we realize OpenAI doesn't really have that much money. Now, maybe they will get that money, but they don't have it today. And so that's why this got hit. Now, if you bought their credit default swaps, you've done well. But Oracle's created a lot of insecurity in the debt market around data centers. Nebius, Iran, those were big winners as well. Again, timing was important. You cannot have bought Nebius in the 100s or Iran at the 70, 80 mark. You had to buy it below where they're trading at right now to really see some big gains. But there were a lot of people that bought Nebius at $20, bought Iran at like $7, $8, and those have worked out. Oh, Google, how could I forget? The Googs, this was a big winner for everybody. Again, I had calls on Google, sold it, made some good money. I did not end up making this a massive part of my portfolio. The only Mag 7 exposure I had this year realistically was Nvidia. The other positions, Amazon, I really just started adding. Tesla's not that big of a position. So it was Nvidia that took up a lot of my capital. But for the people that bet on Google, it worked. It worked heavy. Benny, Austin, Zocold, a lot of folks in the chat that really made sure Google was going to be a big winner for them. And again, this is the one thing I forgot to put in the subs. I realized this morning when I read it over, there's one thing I wanted to write that I forgot to write about, which is that sometimes you don't need multiple ideas. Like a lot of times I've realized that Rocket Lab goes red towards the end of the year. You're going to have one or two things that work. And Bill Ackman talks about this a lot as well. It's like, you don't need a ton of winners. You just need a couple ideas. And if you're lucky enough to have one or two ideas work, you don't need to chase every new thing. That's why I'm saying, like, you don't need to chase silver right now. Like, it's what, like if you were long silver last year, congrats, it worked, but you don't need to chase it right now. You just need one or two. And for some people, it was Hood. For some people, it was D-Wave. For some people, it was Google. For some people, it was Nebius. Realistically, you just need one winner to have a massive year, especially if you're concentrated in that one winner. And I think for a lot of it, Rocket Lab, massive winner for a lot of people. I mean, shout out to Erwin. This guy was freaking buying call options on Rocket Lab after it fell from 70 back to 38, and he's up like 400% on those call options now that it's back to 70. Like, just pure conviction led to so many gains on these names. Broadcom, yeah, that was a big winner for a lot of people. Broadcom's a very attractive company going into the next 5 years if you believe in this broader chip demand thesis, especially on ASICs. Is the multiple amazing right here? No, but also it's down a decent chunk from 420. So I don't know how greedy you have to be to get excited for Broadcom, but 2026 potentially will present opportunities. Broadcom right there, 346. That's down 1% in the pre-market. When was your last grab buy? 490. Bought 5,000 shares at 490 the day that it fell to 490. So that was my last buy. I think grab's going to be one of those positions, dude, when it's all said and done. It might be like one of the largest positions I have where even a dollar move is going to make a massive change in the portfolio. But that's my conviction. We're going to see if I'll be right over the next year. S&P is down 0.2, 685. So right now, at this moment, currently right now, S&P is up 17.3. For us to get 20%, what do we need? For us to get 20%, we need, for the year, we started at 584. We need 697. We literally need 698, 699. We don't need 700, but we need pretty damn close. So you need 698, 699. That'll get you exactly 20. 697 gets you 19.3%. I don't know if we get that in the next 5 hours, dude. That's going to be a little tough. But it's still basically close to 20%. What about Tesla? Put in the chat if Tesla was your big winner. Put in the chat if Tesla was your big winner. I mean, I remember before the run, the Epstein stuff was in July, right? When he tweeted Trump and the Epstein stuff, that's when it fell to 270. That's when the market was in its like bull run post-Liberation Day and Tesla was doing nothing. I mean, it was up from 220, but like realistically, it was not making a move. But you just had to be patient. And by the end of November, you were back in the 450s. And that probably made the year for a lot of people with Tessie. Brian says I'm up 60% on Tesla. Tesla was my big winner. Tess says it was only one of 15. Tess had 14 other winners. So, Tesla was just a small one. Danielle says it was my top winner. James, it was my winner. Trippy says it was my winner. Yeah, I mean, it worked out, but you had to wait. You really had to wait. I made over 20,000 day trading. Wow. Yeah, Tesla's obviously an incredible stock to day trade just because the volatility is so high. The thing is, when the Epstein stuff happened, I remember I went live with Steve that day. I was at AIPCon and I got back to the hotel and I went live with him when it happened. The vibe at AIPCon was crazy. Like once he tweeted that, like AIPCon was not AIPCon anymore. Like it was not about pound. It was all like the entire world, at least in tech and business and finance, was about Elon just tweeted what he tweeted. But yeah, I mean, like it didn't feel like the stock was going to collapse to 100, but it definitely felt like there were going to be some headwinds, and there weren't really that. I mean, it stayed in that 290 range for the next like 2 weeks, but then it busted out to 310, and then after that, I think Elon apologized the next day, or not the next day, like a week later, he deleted the tweet, and then boom, it starts making its move to 350. That one just required that one required like knowing Elon and being like, all right, Elon's doing whatever, like he'll apologize, it'll be okay. And you kind of had to know him as a person to figure out what would happen there. Marvell right there, that's down 1%. Soundhound's down 0.73. Zeta, 21 again. All right, so it's nice to see this volume take it above 21 for the second day in a row, at least above 20 for the fourth day in a row. SoFi right there, 26.48. CoreWeave down 1.9. And then Google, still 314 on the day. Eric says Tesla was my biggest winner, then Rockolab. I think Martin's in the chat. Martin sold some of his Tesla, I think a year or two ago. I remember he tweeted about it, but he bought good old Rockolab at $4. So although he sold Tesla's like 2x in the past couple years, Rockolab has 15x'd roundabout, a little bit more than that, from $4. So not a horrible trade from Tesla to Rockolab. If you truly knew Elon at that moment, he had a 50-50 chance of him doubling down or backing down. Well, I mean, look, he put out that statement, and then a month later, when the Epstein stuff started getting a lot more attention, you did have Trump like really fighting back the release of the files. Now, eventually they released it, but I don't know. Elon was definitely very confident about that. Yeah, you got to wonder who Elon talked to get that information, because he had to talk to somebody. There's no way Elon, unless the Secret Service showed him the files, like Elon had to talk to somebody that had an idea that Trump would be uncomfortable with those files. Where's Uber? Uber was a big winner this year, kind of. Uber 82. It's definitely beat the S&P. Uber stock 20% this year, 29. No, it's a good year. It was at 99 or 97, I think, a month ago. And then the robotaxi stuff from Waymo and Tesla kind of took it back down. But Uber up 30%. 30% this year. Remember Doge? Oh, yeah, I forgot. Doge, that was a part of 2025 that didn't work out. That was crazy too, because I was such a public cheerleader for Doge. Like, I really did think it was going to be special. And I don't even blame Elon for that, dude. That's the other reason why Tesla got hit in the beginning of the year. I forgot. Like, Elon was so infiltrated in politics that's when Dan Ives got upset and Elon was telling them to shut up on Twitter. Like, that's when it created so much controversy. But once the big, beautiful bill came out and Elon realized, oh my, it doesn't matter who's in office. They're just going to keep the money printer on forever, which is why Elon's view has now turned into, let's just grow. Let's not cut spending, because he knows it's at this point basically impossible. I think his whole mindset changed and he was like, all right, I tried. But if I can't do it with the guy I spent $300 million on getting elected, if he's not going to let me actually do this, there's no way in hell it's ever happening. And we're probably never going to see Doge happen. UNH, I forgot about this one. Now, UNH, you have to be good on the timing. Because this thing was 350, 360, was down from 600, but you had to really get this below 300 for there to be some alpha. That 240, 250 range, I think, was really special for UNH. But this one also was not a horrible one this year. All right, what else? Let's see what other headlines we have today. Again, volume not really that strong yet. S&P is flat. No, S&P is down. Brookfield, from the information, is starting a cloud business. What? Well, actually, it's not crazy. I mean, they've got a lot of real estate, so why wouldn't they? They don't have to actually build the technology, but they can license a lot of their real estate, unless they're actually taking on AWS. So that's what the headline says. Brookfield takes on cloud giants and new AI push. That's a little weird, but I guess that's one thing they're going after. Wall Street Journal headline today around OpenAI pay packages. OpenAI's stock-based comp is $1.5 million per employee, workforce of about 4,000 employees. Pay level is 7x Google's pre-IPO stock-based comp in 2003, roughly 34x higher than pre-IPO averages across major tech firms. Equity awards equal 50% of projected 2025 revenue. Meta reportedly offers hundreds of millions to top researchers. Stock comp is expected to be $3 billion annually till 2030. We had the headline yesterday from SoftBank that they are officially putting in their $40 billion into OpenAI, which is bullish OpenAI because they need the money, but a lot of that money is going to be going to stock-based comp to keep these people from leaving and continuing to work at the company. Are you going to sell deep in the money calls on BM&R? Yeah, I'm probably going to. I have not done it yet. I think at the beginning of the year, I kind of wanted to do it above 31, 32, but I mean, look, my average is 42. It's at 27. You sell an at the money call, you get about $12, $13 a premium, basically break even if you lose a little bit. And the only reason I think to do it is if you think, realistically, if you think crypto is a dud next year. Like, that's my reasoning. And I don't know if it will be, but let's say it is, or let's say it's worse. Let's say it actually falls off a cliff. I mean, BM&R is going to $10. MicroStrategy is going to $80. Like, it's going to be ugly. Like, now it will be a great opportunity. I really do think like at some point people are going to be excited to scoop up those assets, but it's going to be ugly. And so the question is, like, are you ready to just DCA through that, or are you ready to buy puts or sell calls, have something that protects you to even have the capital to be able to buy that dip? Now, if it's a dud and it's flat, then it is what it is. It's whatever. If it goes up, that's great. You miss out on some of the gains, but if it has liftoff and ETH's back to 5,000-6,000, I mean, Tom Lee says 7,000 by January. I don't necessarily think that's going to happen. But like, let's say it does, then those calls get destroyed. So you have to be ready for the risk of like, hey, BMR could jump to 60 tomorrow if ETH goes to 7,000. Probably more than 60 because it was at 60 when it was at 4,500. But then the question is the probability on if that happens. And we're going to have to see if that plays out next year. Yeah, Binance gives us another glitch. Or if that does anything. Riot just didn't have the money. Oh boy. Riot, stock's not down too much, but how much are they raising? 500 million. All right, 500 million. I mean, this was a great year for companies that wanted to dilute. It's a great year for companies that wanted to dilute. I mean, there was just so many opportunities to raise capital, including the crypto companies. But the AI plays, Nebius, Iran, all of them diluted, and they were able to raise a lot of money, and that money is going to be going basically to Nvidia when it comes to securing their data centers. I mean, Google raised money, Meta raised money, Oracle, not necessarily through equity, through debt, but it was Rocket Lab, I think, had some dilution. Am I wrong on that? I think Rocket Lab had some dilution. Maybe I'm wrong. But a lot of these companies took advantage of the equity markets. Do you really think BMR will go to 10? If ETH gets down to that below, what, 1,500 level, which, again, I don't think that's going to happen. But then again, who knows? Like, at the end of the day, if we're entering into a choppy 2026, my only fear realistically for 2026, and again, I wrote an article about how the market could correct on Substack a week ago, and the general argument is bullish because of Fed easing and because of AI, but here's how things could be bearish. The most significant thing out of those 4 reasons that I highlighted on how things could be bearish, I can't get over this reason, and maybe it's a naive reason to keep thinking about, but I can't get over the fact that it's a midterm year. And maybe I'm just triggered by 2022 and what happened in the midterm dynamics of that year. Again, we were hiking rates, not cutting rates during that time, but just every time you look at a midterm year, it's not a good year. And maybe there's some truth to that historical tendency. Maybe there's not. I mean, this year was definitely not the same type of historical year, especially because of the April Liberation Day stuff we had to deal with. But I think we're going to need to see some very sophisticated earnings growth and liquidity opening up across the world to avoid the midterm issues. But also, again, there's a lot of liquidity opening up outside of the M2 supply. I mean, I think there was, let me see if I can pull this up. There was a stat I saw as well on M2 supply, or on just global liquidity outside of M2 that has opened up the largest in like 40 years. And it's not like there's not liquidity out there, but you're probably going to have more liquidity coming in, which is, I mean, it should be bullish crypto. We're just going to have to see if that actually happens. Never had 3 straight years with no Christmas rally, and now look at us now. Yeah, but again, I keep bringing this up. The reason we had a Christmas rally for the past 3 years is because August and October tend to suck, and December is recovering a decent chunk of that. Like if August, September, November, and October are just like straight up to the moon, which they were this year, even though November was choppy, we ended green, which was still at an all-time high. I mean, like, do you really get that final month of even more gains? Like historically, you have to have some weakness to get those gains. That's how it averages out. Unless we had Nvidia do like 80 billion of revenues and beat estimates by like 30 billion, and that just takes everything to another level. But that moment of like, oh, Nvidia beats revenue estimates by XYZ, but that was 2023 May. That happened in May when Nvidia put up their 300% revenue quarter that very few people expected, because no one really knew that ChatGPT and OpenAI were buying these many GPUs, and that's how the models are being trained. That was the moment where the entire trajectory of the next 3 years, or 2.5 years, we're going to change. We needed something like that in November, and we just didn't get that. But maybe that means we're getting some consolidation going into the next year, and that actually is a healthy way to start off 2026 as well. What about the Clarity Act for ETH? I don't like, again, the legislation is already there. There's plenty of legislation, including the Genius Act, that's bullish for crypto. I don't really think the Clarity Act makes the biggest difference in the world. I think it'll help, don't get me wrong. But I think if anything, that should be priced in. If the Clarity Act is definitely getting passed, and we know it's getting passed, then everyone knows about it. There's nothing unique about it when it does get passed. It'll probably have some actual ramifications materially, but it's not like the market's going to be like, oh my goodness, we didn't know this was happening, and now this big thing is happening. So I think there's something deeper to the macro cycle versus like the specific headline. But time will tell going into 2026. Kansu, thank you for the super chat. That's very, very kind of you. Thank you for the 140 super chat. Up 80% on Celsius and just dropped another 100K this morning. Happy New Year from Canada. Thank you for being here. Celsius. So this has been a big winner for a lot of people. This stock, I think, is up 50% year to date. Is it year to date? 68%. Up 80% on Celsius, dropped another 100K this morning. I mean, see, the other thing about having a big winner is you're not afraid to buy more at a higher price because your margin of safety is so high because you're probably up so much on it that you don't have to worry. Same thing for, it's easier to buy Rocket Lab at 70 if your average is like 15 because you can average up, but it's harder to buy Rocket Lab at 70 if you've, never owned Rocket Lab before. So incredible. Lots and lots of different names ended up being winners, and Celsius outperformed the entire Max 7 outside of Google, which also has been amazing. Duolingo. So we talked about this yesterday with Steve on the stock draft. Matt's going to win the stock draft for the end of the year. The official stock draft ends in June of 26. He's at 31%. I'm at 25.9. I mean, if I literally had anything other than a stock that was going to go down 60%, I think I'd probably be in the lead because everything else is green. But we got Duolingo. So if this one at least reverses 30% next year, that would help. Steve's up 2%. Tanner's up 18%. His biggest hit was TTD. Chris is up 7%. His biggest hit was ELF. And then Matt's biggest loser is a stock that's only down 12%, Dutch Bros. So then EOG. But ASTS, Rock Lab, and SoFi have helped him a lot. He's up 31% in the draft. S&P, are we still red? 685. Yeah, guys, there's no volume. 10 million shares. There is no volume. At least I'm not seeing a massive amount of volume. Direwolf, thanks for the super chat. My biggest winner was Google. My biggest losers are Sound and BMR. What are your thoughts on SoundHound? Thank you for the super chat. I talked about this yesterday. I think SoundHound has great growth, but the multiple got ahead of itself. I don't know enough fundamentally about the company, to be honest. But yeah, it trades at an aggressive multiple. And that's why it got flipped from 20 in October. I mean, a lot of stocks topped out in October, at least short term, and they got hit. But the S&P is at all-time highs. So it just means that those momentum names got flushed out, and they're going to have to rechange their narrative into 2026. Well, I guess here's the question. Do we think that in 2026, we will have another, call it October moment? And I don't mean October moment in the context of crypto deleveraging, but I mean October moment where things go crazy. Because basically before Trump tweeted about the soybeans in October, things went crazy. Hood was 150, BMR was 60, SoundHound was 20. I mean, you had pretty much Oklo was pushing 200. Like, it was that moment in October. The meme stock ETF came back for the first time in 2 years in October. Where is that ETF, by the way? $6. It came in at 10. It's at 6. It got to 14 at one point. Like, do we get a month like that in 2026? Because I feel like that would take a lot of euphoria and excitement for that shit to happen again. And I don't know if the market's ready to do that again. Or do we need like 5 rate cuts to get there? You mean another glitch? Well, not exactly another glitch. I hope we don't get another glitch. But see, that's the other thing. It's hard to predict 2026. We need some data, dude. We need like a couple weeks of just like what the hell's happening. That would be very, very nice to get a better understanding of what's playing out. I think that's going to take some time. Let me play this clip right here. This is on Josh Brown's podcast yesterday where they were talking a little bit more about M2 and the money supply increasing.
Is where the way that he's defined it with the global liquidity indices, it's the shadow banking system. It's over $100 trillion. And, we talk about the M2 and we see that relationship between the M2, but it's that, and the S&P 500, but it's that global liquidity index that Hal has been showing since 2011. And it just showcases the MSCI is just going straight up. Asset prices continue to rise. And what's pretty interesting about this is that it is the way that Hal defines it, debt is exponential, liquidity is cyclical. So where we are right now, according to him, is that we are at the top of the liquidity cycle at this moment. Right now, the U.S. is very stretched. China is not. So that's kind of where the expectation is that's where the next wave of capital would come from. But I mean, there's no coincidence to any of this. If we go back and we assess the financial markets, you go back to 2023, everybody was bearish heading into 2023. And then Hal comes along and explains, well, no, this is the bottom of the liquidity cycle after the gilt crisis. And then it just absolutely takes off. And we have these 20% annualized returns. And everybody's sitting around trying to explain it and basically thinking that everything is being driven heavily by effectively earnings. There's another chart that we're going to show in a little bit, but since that bottom in 2023, the bulk of the returns are coming from valuation expansion, not from earnings themselves.
Let me hit pause on that.
Yeah.
We're still raising rates in 23. So how are we also simultaneously adding liquidity?
It's coming from the front end of the curve. It's coming from the treasury issuance, and then this capital finds its way into the repo system. Right. And
so this was, I think, really important, which is simply the argument that the M2 money supply, or not just the M2 money supply, but that was a big component, but the global liquidity money supply, about 100 trillion over the past couple of years, has been increased into the broader ecosystem of money that's flowing around, which means in general, one of the more basic economic principles is that if there's more money in the system, asset prices have the ability to rise, even though we were raising rates because of the front end of the curve and the treasury issuances back in 2023 that has continued and is only increasing as per the 40 billion that the Fed quantitatively eased starting December 12th. The thing about that statement, though, is that what he mentions is the U.S. is now starting to get a bit tapped out on the amount of liquidity that we have that we can easily issue. Doesn't mean it's going to stop, but it might not be at the rate of growth that it was over the past couple of years. China has a lot that they can issue. Japan, by the way, not necessarily issuing that much given they just raised rates. So going back to the crypto argument, if there is a liquidity crunch next year, aka we don't get enough rate cuts or bond yields don't come down enough to massively increase liquidity, and crypto is a liquidity play, that is where I think Bitcoin and Ethereum become more volatile. I think it has nothing to do with the Clarity Act. I think that's a too simplistic of a way to think what's going to happen to Ethereum. Now that it has had this massive deleveraging, I think it goes back to liquidity. And we're just going to have to see if we have the liquidity going into next year. Citi's forecast for the upcoming December jobs report due next week. Non-farm payrolls plus 75,000, unemployment rising to 4.7%. Yeah, jobless claims again were pretty good this morning. So if we actually get unemployment to rise, it would show a bit of a disconnect between some different parts of data. Maybe helps us get the rate cut if unemployment's rising. I mean, if we get to above 5% unemployment by the midterms, I wonder if that meaningfully affects the consumer. Because if it does, these midterms potentially go the opposite direction for the Republicans. Now, that doesn't mean that the Democrats winning the House, which I think the prediction markets have the Democrats at a 65% chance right now winning the House, at least winning one part of Congress, either the House or the Senate. I don't know if that fixes the affordability or employment issue. I mean, at the end of the day, I don't know if that just magically makes employment better, but it will become an emotional reaction for a lot of people that might just vote for the sake of voting against the current administration. So that's also going to be a big question going into 2026. SoFi is red once again. 26.43. PayPal. Yeah, PayPal has been pretty boring. But wow, PayPal's down another 1%. Dude, is this the first time it's hitting 58? I don't think it's hit 58 in a minute. Yeah, this is the first. Wow. This is the first time we're seeing 58 in a while. I think we touched it. No, we touched 57 on November 21st. Then we rebounded. We are close to those November 21st levels. Silver still down 8%. Silver 6.7% on silver, 72.70 right now. And then gold is down 1%. Yeah, guys, I think people went on vacation for the past week, but the net pressure you're seeing is selling pressure. 685.39 on the S&P. Oscar, this one as well. I know this was a big retail name, got up to 24. I didn't buy it because I didn't understand the healthcare subsidy debate. I think a lot of people bought it because they thought it was cheap, but this stock trades on healthcare subsidy narratives more than its cheapness. So that's one thing to look out for next year. Nike's up, insider buy, got people excited. Nvidia loses 190 again. So that one has not been able to make a move either. Doug says the only thing POTUS can do now is get the courts taken care of. Legislation is dead. Dems wouldn't let GJT fix something because they want the issue, not the solutions. Yeah, I mean, you've already got people starting to talk about Trump as a lame duck president now if he loses the midterms. This is his last 3 years, right? So the big, beautiful bill he got passed this year, which is going to have a lot of implications on GDP growth, taxes, et cetera. The tariffs he got passed, which is going to have implications on the investment that's coming into the United States. But if the Supreme Court reverses the tariffs, maybe it reverses the big impact that the tariffs could have had, at least like forcing the EU to buy $750 billion of gas, for example. And so then the question becomes, outside of the big, beautiful bill, what is he going to legislatively get passed in the next 3 years? And by the way, that's not specific to Trump. That's specific to every president. They like with Biden, it was the ironically named Inflation Reduction Act. The only reason I say ironically is because inflation was up a lot in 2022. That act came out in 2021. And then with Trump in 2017, it was the Tax Cut and Jobs Act. Like, you really get one major milestone piece of legislation, which is why Trump campaigned so hard to get the big, beautiful bill done, which barely got through. And it pissed Elon the hell off because of all the spending. But he got it done. And so now what's the next big thing? What's the next big thing? And so we're going to have to see, because he's got this year to do it. And if he doesn't do it this year and they lose the midterms, I mean, Obama's second term, if you dive into the history of it, once they passed the Affordable Care Act in 2010, which was like the biggest change in healthcare we've had in basically 50 years, it gave rise to the Tea Party movement in this country. You had a lot of libertarians step up and say the government is getting way too involved because of what they thought was like a socialist healthcare system, which if you're from Europe, the Affordable Care Act is not necessarily the same type of thing. And then his last 4 years were gridlock. He could not get a single thing done from 2012 to 2016. Everything he did was symbolic. Everything was symbolic. Paris Climate Change Act, symbolic. Iran nuclear deal, symbolic. There was like no real legislation that he could get because he just didn't have the votes. If you don't have the votes in this country, you can't get shit done. And so the question is going to be for Trump over the next 3 years, will he have the votes to even have a chance to get some stuff done? Let's take a look at some of this data around jobless claims and unemployment, along with some of these other price increases as we get into the end of the year.
That hit the market with the lag, and that's why prices have gone up so much. The tariffs didn't help, certainly in places like Brazil, because that's where we import a lot of coffee from. But the president did announce some relief on the tariff front in places like beef and coffee. And then coffee prices did decline about 6% since he announced that. So that should be helpful. The other good news story here is
that does give you a good sense.
Yeah,
I mean, that's a significant, significant expenditure increase, certainly.
Absolutely. I think the good news, though, is that supply has improved. And so with the lag in a few months, we should be looking at lower prices. But if you're feeling that at the grocery store, that is why. I mean, prices of coffee have shot up a lot. All right. The other big theme has to be the CapEx, the spend from the major hyperscaler tech companies. So we put all of them together in a bar chart of how much they're spending, the numbers. We always talk about how staggering the amounts are.
Yes.
This is the annual spend from the biggest spenders on building out our AI infrastructure. Amazon at the top, about 125 billion. If you add all these together, you get more than $400 billion.
Yeah, you get an enormous number, and that's the key to the market in so many ways. Now, Amazon, to be fair, remember, they do have an enormous retail business that they are still spending a good amount of CapEx on. You can't drive without seeing an Amazon truck. 5 years ago, that was not the case. I mean, they've spent and continue to spend on distribution centers, on robotics, and all sorts of things going in there that are not related necessarily to where the bulk of the spending is taking place, which of course is Amazon Web Services and obviously the cloud computing.
Sure, but
ability.
it's spending and it's boosting the economy. It's boosting CapEx. It's boosting the market. And when you look at some of these numbers, I mean, Meta in itself, which doesn't even have a cloud or enterprise business, spending $71 billion.
Incredible.
You put it all together, and I was looking back, the financial crisis bailout, the TARP funds that were actually allocated to bailing out the auto sector and AIG and some of the banks was in the realm of $450 billion. I mean, more was allocated for it, but just to give you a sense of the size and the scale of what is going on here and that what is driving this market and the economy. And then finally, and we've talked about this a lot, but I think it's going to be one of the key questions going into the new year, which is the unemployment rate is rising and GDP is rising. And this might have to do with AI, but this is unusual what you're seeing, right? Unemployment rate rises, and usually that's recessionary, that growth slows down. What's going on here where you're not seeing a ton of hiring, but growth is really strong? Part of it might be all the investment in AI and you know, what companies are deciding to do.
We continue to struggle with the idea of whether that investment is really generating any sort of significant return at this point. It's such early days when you talk to people who run large organizations. You know, it's not that easy to take an AI tool and share it within and have your employees use it appropriately and effectively to really increase efficiency. That will happen, but it's not clear that that really has happened yet.
Yes, agree. And I think,
I mean, a lot of these charts that define the year that they showed boil down to inflation, unemployment, and CapEx. Inflation, relatively tame. Unemployment, higher, but not catastrophic. And then CapEx continues to be strong. I think you need the same recipe going into 2026 for us to see momentum. If not, then we're going to have a lot of different issues to navigate next year. AWS capacity and TPU is already coming online. Amazon is getting ready for the launch. You know, that's another thing for Amazon that we don't talk about enough. Dude, like the Trainium chips should be, I think, a revenue driver next year, like a meaningful revenue driver. And it's not going to replace Nvidia. It's not going to replace Google TPUs, but it's going to be important along with all the other variety of reasons that we've already talked about for why Amazon should be good. Like, I think Amazon should be a layup for us next year. I don't know if it will be. They don't have the types of margins that Google has where they can flip a switch and, you know, Google can really show. Well, realistically, I don't even think Google was a margins. Google was the DOJ stuff. That was the overhang, along with Gemini just being lackluster until recently. They fixed those two things. You got Buffett involved buying stock. I mean, that's what really took Google up. Amazon, I think, is more so a question of AWS acceleration, margin growth, but all that stuff is going in the right direction. So I think we're looking closer to a, hopefully, you know, 280 to 290 stock, if not close to 300 by the end of the year. Derek Dagger, thank you for becoming a channel member. And thank you for being here. Nvidia right here, 188.75. That's a 0.65%. Again, I will be at CES in Vegas next week. I'm going to be there for a full week. And I'll be at the Nvidia event as well. So I'm going to be very excited to see people there. I think I'll be interviewing a couple people from Nvidia. And I've never been to CES and I've never been to an Nvidia event. So actually getting to see a lot of their technology live is going to be fun. I think the biggest thing that I'm excited about is physical AI and robotics. Like, could that be the thing that finally explodes next year? Because we need another use case of AI besides self-driving and LLMs. And I think the bots are the obvious use case. So can we see it in action? Can Nvidia, which has stakes in all these private humanoid robotics companies, can they also work with them to actually get robots doing really meaningful things next year? That is going to be important. Yes, I will also see Davis. We'll also annoyingly have to deal with Davis. Derek says, I'm back. Derek, I love it. Derek works at Nvidia, for those that don't know. He was at the Miami meetup. He gave me Nvidia socks, which I think I wore on the earnings. It was a hell of a good earnings. It's just the market wants to be afraid of giving Nvidia a little bit of love, which is crazy that I say that because the stock's worth almost 5 trillion. I'm saying they're not giving them any love. But if you believe the earnings projections, Nvidia's cheap. They've just got to come through on those earnings. 188.75 is what we have for Mr. Nvidia. Pablo, thanks for the super chat. Hi, mate. Happy New Year's. Wishing you the best for 2026. Any thoughts on ABCL and Kraken next year? ABCL, I'm not interested in just because it's a biotech, and I really do think you have to have a 10-year horizon, if not longer, to see this thing play out. Kraken had a lot of momentum, Kraken Robotics, earlier in the year, and it's done really well. Like I think it's up 100% this year, more than that, 154%. But the only thesis I'm seeing on this is that it's an Anduril proxy, which is great. I just don't really want an Anduril proxy, or I think I need an Anduril proxy. So if you really want exposure to Anduril, Kraken's one of their biggest suppliers. I just don't know if it's that exciting. But it got a lot of people into it. It's up a lot. And, you know, if Anduril goes public, that stock should do well. I don't think Anduril is going public next year. I think 2027 is for Anduril. I think next year's for Databricks and SpaceX. Those are going to be your two big IPOs. Maybe Discord and Stripe come public. But realistically, it's those two. And I wrote about this in the Substack last night, but I'm not buying any IPO outside of Canva. And I'm only going to buy Canva if I can get a decent valuation on it. Outside of that, I think every IPO is going to be egregiously overpriced. Every IPO is going to be looking for massive liquidity. And I want to see if every IPO can actually survive 6 months in the public markets and like live up to the hype. Because the clearest example with one of the best quality companies that went public this year, Figma, I mean, they're down a lot, not from IPO, but from the hype. And the hype is when people buy. This thing got to $148 the week of IPO. It's at 37. Like how many bag holders were made at 70, 80, 90, 60, 50, 110, 120, 130? It's back at 37. Which for, you know, trading at 18 times price to sales, like that's reasonable for Figma. That's probably aggressive for Figma. But it's not like the public markets are being brutal here. It's just like the euphoria got ahead of itself. And I think that shit's going to happen to a lot of those other names as well. So, yeah, I think giving them some time is going to be important. And again, I also think there's proxies in the regular stock market to play the IPOs, like Rocket Lab for SpaceX, for example. CoreWeave, yeah, I forgot CoreWeave did IPO. Now, CoreWeave is still up a lot from the IPO. It's at 72. This thing got to 150. But CoreWeave, I don't really think that's purely euphoria. I mean, it definitely is some euphoria. CoreWeave's still up 80% this year. The issue with CoreWeave is Oracle. Oracle scared everybody by issuing the amount of debt that they issued. And because CoreWeave and Nebius, et cetera, they're neo clouds, they get bunched into the bucket of data center plays. And if Oracle was going lower, CoreWeave was bound to go lower. Yeah, Chime. What was Chime's IPO? So Chime, year to date, 30% down. If you bought it at 16 at the lows, you've done well, but that one's been hit. And then VG, we all know that one's got destroyed, down 70%. And then what was the other main IPO? Fermi was horrible. Circle, pure euphoria. Wow, 4% year to date. This thing, well, technically it was $30 at the IPO. You just had to like be an institutional investor to get that price. But this thing got to 300, got to 298. Now down to 80. So again, a lot of these names just didn't end up making their move. Dougie, thank you for the gifted 5. Appreciate it. Doug, for those that don't know, is a private investor in Anduril. And so he's going to love it when they go public. The question is, are you going to be buying Dougie's bags when he offloads them when they go public? Now, I don't know the terms of his agreement. He might have to hold on to it for 6 months. He might end up holding a little bit of a bag as well. But the fact is he got it at a pretty good valuation. So even if it goes down from IPO, he should still be up because he got in early. But you got to be in early on these names to really benefit from them until you see the data. And the data just requires a couple months of surviving the public markets. What about Figma? Yeah, we talked about Figma. Figma was great, but it got overhyped. So I think the IPO market next year is just something. I also wonder, is the market going to be exciting enough to have IPOs? Like, we need a bull market for Elon to be like, yeah, buy my company at 1.5 trillion. Like, you need a lot of excitement. I mean, there's only so much money people have to make a bet like that, knowing that they're overpaying for something, but just for the pure excitement of wanting to get access to the asset class. And so I wonder the timing of these IPOs and how it correlates with the broader market. Yeah, Newsmax. Well, that was 2024, right? Oh, Webull was 2024. That's been a disaster. Newsmax is down 90%. Is garbage. Like actual garbage. Like, why is this a public company? Like legitimate garbage in our public markets. Newsmax. That got to freaking what, 500 one day? I got to $233 the week of IPO. And then Webull, you know. Oh, this went public in 2025? Oh, wait, hold on. No, it didn't. Why does it say Webull went public in 2022? No, it did not go public in 22. I don't. Google's wrong on this, but yeah, this one's also down 32% this year. So this one did not necessarily work. Be Menard down 1.2. SPY, she keeps going lower. She's not moving. 685. SPY is down. Smit Patel, thank you for becoming a channel member. If your name was Amit Patel, which there actually is a real Amit Patel. He's actually a good friend of mine and Chris. His name is Amit Patel. It's actually hilarious. But thank you for becoming a channel member. Oh, yeah, it was a SPAC. You're right. It was a SPAC. That's why it was there since 22. It's a fair point. That's a fair point. All right, let's see what else we got. What else? Let's pull up some of this stuff right here. Oh, here's a good chart to look at, or a good tweet. So this was month by month for the S&P. This gives you some context on how this year ended up playing out. So January, we were up 2.7%. Everyone was happy. February, the beginning of what was going to happen. March, ugly. April ended up only being 0.9%. It was a 30% drawdown in April because of the Trump buy the dip tweet, which reversed. And then after April, all you had to do was keep buying for like the next 3 months, realistically. I mean, obviously you bought in April. That was amazing. But if you didn't time the exact bottom, all you had to do was buy May, June, and July. May, 6%. June, 5%. July, 2.3%. August, supposed to be bad, 2.1%. September is supposed to be horrible, 3.3%. October is supposed to be bad. I know we had the deleveraging event in crypto, but that was 2.4%. And then November still ended out green. So realistically, I think most people's years were year to date was made in May, June, and July. I know that I was buying Hood and Nvidia aggressively in those 3 months and like averaging up, but still like theoretically I was averaging down because they were down so much. But those 3 months were the years, or at least made a lot of the year, I think, for most people. So that's it. You just have to trust those 3 months after April, if not April itself. The volatility was crazy, but that's all it took to have a good year. And I don't know how 2026 is going to play, but that's realistically all you needed to end up having a massive year. Where's the heat map? Let's take a look at what else is going on here. Dude, it just feels so dead. Oh yeah, look at this heat map, bro. Everything's red, but it's like barely red. Like you would see it bright red if things were actually down. It's all like 0.03%, 0.2% down. Like there's nothing there. There's absolutely nothing there. Stranger Things finale tonight. Who's watching? Are people excited about Stranger Things? I mean, again, I do think that there's another show on Netflix that people should seriously take a look at. It's called Grey's Anatomy. I don't want to keep beating the drum about it, but I'm just saying. But I heard most people hated Stranger Things, dude. Like most people hated Stranger Things, or at least the recent couple episodes. Ondas is up today. This one, another drone name that gets a lot of attention, up 11%. This one goes up and down though. Like it's very, I mean, just look at this chart. Got to 9, then it fell to 7, then it got to 850, fell to 7, then it got to 950, then it fell to 8, now it's back at 10. So I feel like this one just has a lot of people trading it, but it has been great this year as well. Not after volume 2. Yeah, people just didn't really love this season. Stranger Things season 5 is the worst. Dude, what is the show about? Can somebody just tell me in a sentence what it's about? Like, is it like some sci-fi shit? Some like magical stuff that happens? Like some ET phone home nonsense? Like what exactly is that show about? Because I've never even like looked into what the show is about. Trump Mobile to delay launching the gold-colored smartphone, as per the Financial Times. Do we guys remember Trump Mobile? That was a big piece of news. You can get all American performance every day for $47.75, $47.45 a month. And obviously you know why they picked $47.45 a month. Looks like that's going to be delayed for a little bit. It's about aliens. It's about kids fighting monsters. That's what you guys like? Kids fighting monsters? That sounds like not interesting. Kids fighting monsters. Is that actually what's so exciting? Kids fight monsters? See, I can't do that, bro. Like, I need something different. I'm not even trying to like make fun of people that watch it. I'm just like, if that's really what it's about, kids fighting monsters, like if that's how you said, like, no, dude, I'm not like, no, I can't. I'm not sitting through that. That's an oversimplification. Okay, so what's the actual way to describe it? Because if it's not kids fighting monsters, weren't you the one that couldn't finish The Godfather? Well, we're not talking about that right now. We're talking about kids fighting monsters. You watched Harry Potter? Yeah, but Harry Potter is like generational content. Harry Potter is like once in a lifetime type of storytelling. Like that's different. And also, I watched one movie during the Thanksgiving break. It wasn't like went on a marathon for the movies. But I don't know if Stranger Things can compare to that. So you didn't like Scooby-Doo? I mean, when I was younger, I think I kind of liked Scooby-Doo. But Scooby-Doo also is just like, you really got to be a kid to watch that stuff, bro. Like, or you have to have kids and it has to be on the TV and you have to be sitting there and get into it. Like, bro, when I have a kid, I wonder if I can throw on like a philosophy podcast when they're like 3 months old. We can get some Nietzsche and some Albert Camus into their subconscious. Do you think a kid would be able to like stare at like a guy talking in front of a microphone on YouTube? Could that work? Got to keep them entertained? That's what I gotta get my kid into when they're young. Alan Watts, dude. Alan Watts, incredible philosopher. Absolutely incredible philosopher. Like Jerome, yeah. Well, Jerome Powell's not going to be speaking when I have kids, but whoever the Fed chair is, I need to make sure. Dude, can you guys imagine if freaking Hassett is our next Fed chair? Like, if we have to really analyze every word that this guy ends up saying, like, can you imagine for the next, what is it? How many FOMCs we have? Like a year? We have 8 times 4, 8 times 5. It's a 6-year term, 8 times 50 meetings. We're going to have to look at this guy smiling when he's not smiling, but then also kind of smiling. I mean, whoever the Fed chair, we're going to have to take every single word they say seriously. Every last sentence and syllable they utter, we're going to have to pay attention to that shit. And it might end up being Hassett. No way it's Hassett. I mean, if Trump wants a loyalist, it might be him. But yeah, I think there's a chance it might not be. Steve for Fed chair. Oh, could you imagine if Steve was the Fed chair every day, dude? Could you imagine? Mr. Fiorillo, what do you think about the relationship between I don't care? Like, what do you think about inflation coming to I don't care? Well, what about the labor market? Like, I don't care. Like, it would be hilarious. It would be absolutely hilarious. Steve honestly would just abolish the Fed. He was not a fan of the Fed. He doesn't think the Fed should exist. So, to be honest, he might just get there, become the chair, and say, we're getting rid of it. There's some coverage on Warren Buffett and his final day as CEO of Berkshire Hathaway.
And he plans to continue coming into the office each day. In fact, he's there not only 5 days a week, but I think he comes in sometimes 6 days a week too, either a Saturday or a Sunday.
Amazing. Is it Cherry Coke Zero or Cherry?
No diet, no zero, full on. Yeah, he likes the full flavor.
I like it too.
Sugar.
I like it too, as well. He's done a lot for the NCAA March Madness. I mean, he's done a lot
For a lot of things. I mean,
he's given me a brick. I have a brick. I have
an Acme brick.
An Acme brick.
He's given away more than $50 billion already. His plan is to give away more than 99.9% of all of his wealth.
Give me a lollipop.
Children are going to finish carrying that out for him.
Yeah, they will.
And
dude, that is the other crazy thing about Buffett. His goal is to give away all of his money. He's talked about this before, and he wants to leave some for his kids, but he doesn't want to leave them enough to the point where it's more than enough. Here's what he said 10 years ago about giving away his money.
We really had the same objectives. She would have started giving it away sooner, and I had been more impressed by the benefits of compounding when I was young than she had been, and so I kept telling her that we would give away a lot more money later on than we would be able to if we'd started on a big scale 30 or 40 years ago. But I'm sure if she were here, she would still have her own preference. But I think that's worked out pretty well.
It's an interesting debate, isn't it? Because everyone in Silicon Valley is talking about starting to give very early in their careers, as soon as they make it, or as they're making it, they should give away. But you think compounding? They need to think about compounding.
Yeah, well, they have a little different. They've gotten their ideas capitalized at a very fancy value very early on, so they didn't have to grind it out the slow way by compounding, with this one and that one and so on. So, if I had 20 or 30 billion dollars when I was 30 or 35 years of age, I'm sure I would have started in a big way. And my wife, if I had, my wife would have pushed me into it. But with me, it's been more of a steady progression over time. And when I wound up my partnership in 1970, I had $25 million, and if I'd give away a large portion of that, then there'd be far less to give now. So
there's another video that was dug up from the Buffett files that I think was really important as well, which is the worst stock he's ever bought, or the dumbest stock he's ever bought. It's actually a very interesting story, but it's the story of how he ended up buying Berkshire Hathaway.
the management, Mr. Stanton, and he looked at me and he said, "Mr. Buffett, we've just sold some mills. We've got some excess money. We're going to have a tender offer. And at what price will you tender your stock?" And I said, $11.50. And he said, "Do you promise me that you'll tender $11.50?" And I said, "Mr. Stanton, you have my word that if you do it here in the near future, that I will sell my."
He's talking about negotiating with the CEO at the time of Berkshire Hathaway, which was a textile company. This was back in the 50s, or I think it was the 60s.
Stock to $11.50. I went back to Omaha, and a few weeks later, I opened the mail.
Oh, you have this.
And here it is, a tender offer from Berkshire Hathaway. That's from 1964. And if you look carefully, you'll see the price is 11 3/8. He chiseled me for an eighth. And if that letter had come through with 11,
AKA Buffett was going to tender the shares at 11.50 and just make a little bit of a spread on the arbitrage from Berkshire Hathaway in their latest capital raise. And he said, the president, the CEO said, yes, 11.50, that's the deal. He sends the contract at 11 3/8, and Buffett gets pissed. And then he decides to do what Buffett does.
1.5, I would have tendered my stock. But this made me mad. So I went out and started buying the stock, and I bought control of the company and fired Mr. Stanton. And we went on from there. Now, that sounds like a great little morality tale at this point. But the truth is, I had now committed a major amount of money to a terrible business. And Berkshire Hathaway became the base for everything pretty much that I've done since. So in 1967, when a good insurance company came along, I bought it for Berkshire Hathaway. I really should have bought it for a new entity. because Berkshire Hathaway was carrying this anchor of all these textile assets. So initially it was all textile assets that weren't any good. And then gradually we built more things onto it. But always we were carrying this anchor. And for 20 years, I fought the textile business before I gave up. And if instead of putting that money into the textile business originally, we just started out with the insurance company, Berkshire would be worth twice as much as it is now. So,
Twice as much?
Yeah, this is $200 billion. You can figure that comes about because the genius here thought he'd run a textile business.
Why $200 billion?
Well, because if you look at taking that same money that I put into the textile business and just putting it into the insurance business and starting from there, we would have had a company that, because all of this money was.
Even Buffett has opportunity costs. So if you were in a stock this year that didn't work out, Buffett had a $200 billion opportunity cost back in the 60s. It ended up working out, but even the greatest investors have years or decades where their picks don't work out.
Drag. I mean, we had a net worth of $20 million, and Berkshire Hathaway was earning nothing year after year after year after year. And so there you have it, the story of a $200 billion. And incidentally, if you come back in 10 years, I may have one that's even worse.
If you had to look at a moral for that story, though, is it don't cut off your nose to spite your face?
I would say that no matter whether you cut off your nose to spite your face or whatever, if you get in a lousy business, get out of it. I mean, it was a terrible mistake just because I drifted into it in a sense. And I've always said that if you want to be known as a good manager, buy a good business. I mean, that's the way to do it. And then everybody will think you're smart. And when I'm in a good business like Seas Caddy, people think, boy, that guy's smart. And when I'm in a dumb business like textiles and don't know what I'm doing, or shoes later on or whatever it may be, and all that other, if you think you're a managerial genius, just try yourself in a bad business.
Is that the lesson?
It's pretty incredible, right? That is how he even ended up naming his firm Berkshire Hathaway. He was in this freaking textile business that he had no idea why he was in it. But it's also pretty gangster. It's like for 8 cents, he got upset and he was like, I'm going to buy your company, fire you, and take control of this, and then take a $200 billion L, literally a $200 billion L for 20 years before I figure out what to do with this. Like, I don't know, Buffett was that like, Buffett, he's like a nice little old man who's very happy and gracious, but like when I think he was in his 30s at the time, he was ruthless. He was absolutely ruthless to literally take control of something because he thought he got slighted by someone else. And that's kind of the story of how he ended up getting Berkshire Hathaway. S&P 684.91. We are red, folks. We are now at the lows of the day, down 0.31. The Googs is red. Broadcom's red. Again, volume on the S&P 15 million. It's like okay volume, but realistically 75 is the average. So it's got a lot more volume to go if we're going to see any momentum. Pouncer back at 180, grab at 507. VG is green, Verizon's green, Bloom Energy's green, Iren's green. Everything else relatively flat. Yeah, I'll link the vid right here. All right, what else? What else? See, we don't even know if his last investment was Google because that was probably Greg Abel more than Buffett. So maybe Buffett gave some insight and said Google was good, but I don't think Buffett was the one who really advocated or cared that much about Google. Yeah, as Laura says, very, very light volume. UNH. Yeah, 100%. I think more likely his last trade was actually UNH. I agree. Gemini's down 80%. Gemini, this was another crypto play. They're like a crypto credit card slash freaking exchange. Gemmy is their stock. Yeah, dude, every IPO this year has been kind of trash. You got a couple that have went well, but it's not been amazing for the IPOs. We didn't get the Chamath SPAC this year. That was supposed to happen. That didn't end up becoming a thing. What's going on with Red Cat? Where is Red Cat? Is that down? Red Cat's up. All the drone stocks today are up. I think there's a drone headline. That's why Ondas up 14%. Let me see if there's any drone stuff. DJI got banned last week, but that's old news. Ondas secures 10 million in new autonomous system orders as global demand for multi-domain defense solution accelerates. Okay, that's your press release. That's probably pumping all the drone stocks today. But again, it's been oscillating between 7 and 10 for the past couple of weeks. So the question is, does it break out from here? Or does it get hit bad again? Oh, here's another clip. Let's pull this up. This is Buffett's, I've actually never seen this, Buffett's first ever interview 63 years ago.
Observers from time to time say that the stock market is a forecaster of events to come. Can you predict, or would you care to take a look at what you think this might be forecasting, the decline?
The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market.
Yo, Buffett was a stud. Imagine trying to cheat this guy out of a couple cents on a business deal. He's coming after you. He's going to ruin your freaking life if you try to mess with him.
Has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher or thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
Well, in a nutshell, Mr. Buffett, can you give us your opinion of just exactly what happened, what caused it?
Well, there was undoubtedly some forced selling the week when the stock market hit the news. The previous week, prices had declined about 6% for the week on average. And there was some stock that was forced upon the market both by margin calls from brokers and some that was forced out by improperly secured bank loans. And this in turn set up a self-generating mechanism on the downside for a while, which we may have seen the last of and which we may not have seen the last of.
Dude, I've actually never seen that. That's crazy. 63 years ago. How old is Buffett today? That's when he was 30, right? How old is Warren? 95. So 95 minus 63. He was 32. He was 32 entering the world of money management. And he'd already made a name for himself by then. And people were curious about how he thought about the markets. Can you imagine if he had said glitch? Oh my gosh. See, well, there's two different types of people. There's a Warren Buffett who would never touch or even think of creating something like a BMNR. And then there's a new generation of investors like a Tom Lee, who from a macro perspective have been right for the past 3 years. But they ended up getting into something that in the short term has just not worked out, aka Ethereum. And you have Buffett's sort of philosophy that would never evolve him to be led into something that could glitch like that. Now, granted, Buffett's had his losers as well, but if it's a loser, it's for a different reason. It's not for a crypto deleveraging type event. S&P, new lows of the day, 684.79. It's just two different types of styles of investing. And you've got a lot of different people that believe in certain styles and believe in other different perspectives. Do you really think Buffett ever made bad short-term plays? No, I don't think so. Because again, Buffett is so long-term. I mean, if you look up long-term investor, you should see Buffett. Like Buffett is the definition of that. So obviously there are some plays that he didn't get right, but I remember in 2008, he sold 35 billion worth of puts on the S&P. He collected like 8 billion of premium. Like we talk about selling puts and getting premium. That's when Buffett sold some freaking puts. He like called the bottom and he got some amazing sweetheart deals with the banks, Bank of America being one of the best ones. And he made money. He made a lot of money. Yeah, I mean, over the past couple of years, he was in and out of TSM. That's fair. Like he's made some of those trades, but I don't even think that's really him anymore. Like over the past year, anything that's like under $10 billion, I don't even think he's really managing. The last biggest call I think he's made is Apple. Like the last really big thing he's called since 2016 is Apple. And I think that's his final main investment for Berkshire Hathaway. Siege, thank you for the super chat as well. That first interview of Buffett is what it's like for me listening to you talk about the market every day. I keep saying this. It is completely false. I appreciate you're gonna make me blush. You're making me try to explain what doesn't need to be explained, which is that I'm not Buffett. I don't think I'm ever going to be Buffett. But I really do admire and value Warren Buffett. I mean, again, I don't agree with every form of philosophy that he has in investing, but for someone to compound and beat the S&P for 70 years at double the rate, it's just, you have to just tip your hat and be like, that is one of the greatest investors of all time. I feel like I'm more in the ideological camp of Stanley Druckenmiller, but Stanley has not done it for as long as Buffett, and that matters. Like, longevity matters, because Stanley did it for about, was it 15 years, 30% a year for 15 years, and then he bowed out because, I mean, if you've heard him talk about it, he's like, the stress got to him. Like, literally, he's like, and when you're at such a high level, which is 30% a year, is just like, Buffett has not done 30. He's had some 30% years, but he's not done 30% a year consistently. How do you beat that? If you go another 10 years and you don't get 30%, like that, your performance will get diluted. It'll become average. So it's kind of, Druckenmiller was kind of like, I want to leave on top, was kind of his motto. And that's what he did. But Buffett just loved the game so much that he stayed forever, literally forever. And he still was able to compound. And if you're going to stay for an extra 40 years, you're going to make some mistakes, which is going to dampen your performance. So, yeah, I don't think I'm ever going to be Buffett or even have a chance to be Buffett. But the longevity of Buffett is what I think to me is so inspiring. Yeah, but Peter Lynch also, he didn't last as long as Buffett in terms of managing the Medallion Fund. That was what? How many years was that? That was 30? No, that was only 13 years, bro, which is incredible. Absolutely incredible. No dismissing that. But that's where Buffett is differentiated. Buffett stayed in this thing for 65 years. 13 years at 29% is incredible. 20 million to 14 billion, but he bowed out as well. Which, again, you can't blame the guy. I mean, like, what can you say about Peter? The most you can say is, oh, he didn't go longer. It's like, okay, who cares? But I feel like at least 10 years is enough to, I feel like 10 years is the cutoff on a like actual qualitative metric, S&P new lows of the day, 684.24, to say you 10 years, like 5 years is too little. Less than 5 years is nothing. 10 years, I feel like, is appropriate. Now, you get 20 years, you start really getting into that conversation of just pure longevity, but you need at least 10. And Druckenmiller did 15, Peter Lynch did 13, Buffett did almost 70, which is kind of wild. Amit, do you know when the Supreme Court decision comes out on tariffs? I have no idea. I believe it's early January. I mean, I thought it was supposed to be like mid-December, but it looks like it should be early January. And so we should know next month. Where's the 10-year right now? Let's see. Is the VIX even up to the VIX? I think the VIX is flat. 10-year is at 4.13. VIX is up 2%. All right, so the VIX is not crazy move, but it's flat. So yeah, I think that's why Buffett's the GOAT. The longevity argument is a big, big deal. Test right there, 453, because that's also red. You can get burned out on Wall Street. Yeah, dude, I can't imagine that, dude. Actually managing real money for other people on Wall Street, like that shit's got to be, it's got to be one of the most stressful jobs, I think, because like you have no one to blame but yourself. You're making the decision. Like you can't blame the Fed. Can't blame that your clients, quite frankly, don't care who you blame. They'll take their money out if you underperform. It's a ruthless game. I mean, that's what Burry talked about as well. He was just like, I got really tired of managing other people's money and having things Burry said for this whole like public display of content that he's been putting out now is that he wants to go short the .com bubble, the AI quote unquote bubble, the way that he shorted the .com bubble, and he wants to do it in like a big short type of way. But the reason he said he closed down the fund is because he knew that his investors would never be on board for him to go down or to be as aggressive as he was back in 2008. Because if you know the story about 2008, he made his investors like $1 billion, but they all were pissed at him because he took so much risk. So one of the reasons he wanted to close the fund is because he wanted to take another big risk again, but not have to deal with their approval. Which again, do we get a 2026 type of .com type of meltdown? I don't think so, but that is something that Burry may want to do. I don't care. I'm blaming everybody else. Well, it is kind of easy to have someone to blame. Which is why I think Tom Lee's getting so much hate right now, bro. Like, at the end of the day, the stock is down. And, you know, people are looking for a reason to be upset. My biggest thing on this is, and I said this a couple months ago, I don't know. I didn't see the need to create a digital asset treasury. Like, if it was for money, I feel like he's made enough money and he has granny shots. Like, he's making plenty of money. But I guess that's where people want to make even more money. Unless he genuinely felt ETH is going to go to freaking 10,000 in a couple months, which if he did, and that was the pitch, it was wrong. Like, the entire thesis in the short term was wrong, which unfortunately has created a lot of backholders. And the worst part about this is it's very similar to what I talk about when it comes to content creation. Like, if you're a content creator, you have an audience and they care about you, and then you do something stupid like a dumbass course or some Discord that charge $80 a month for that has no value, like stuff that just delegitimizes your brand. You take a sponsorship from a scummy company like FTX or something. Like, you don't need to do that. You're doing it out of greed and you're ruining your long-term shit. I mean, like, and so the point is, Tom Lee's brand is the single biggest brand in finance. It was the best brand in finance. I mean, like, realistically, who had a better brand in finance other than Tom Lee? He's been right for the past 3 years. He did not have the whole Kathy nonsense of saying Roku is going to be $1,000 or whatever. Like, he's been relatively reasonable. And then you come up with this shit that just turns a lot of people into backholders. That's the issue. That's the issue. Okay, I'm not talking about not comparing Tom Lee to Buffett, but I mean in terms of financial media, I should say. Like, every time he talked, everyone wants to listen because he's been right for the past 3 years. Like, and he can go a little bit more deeper on a lot of topics than Dan Ives. Dan Ives has also been right, but Tom's just a different macro mind. He uses a lot of data to come to conclusions. And so there's always something interesting to listen to. And when you're right and you talk about things that are interesting, I mean, you develop a massive audience. But then if you have a hiccup, which everyone has hiccups, it's just the hiccup can't be affecting retail. Like, people who lost money on Kraft Heinz because of Buffett's bad pick in Berkshire, if they owned Berkshire, they still made money. Now, if they individually went out and bought Kraft Heinz, they lost money, which sucked if they followed Buffett into that. But if you invested in Buffett's enterprise, you still did okay, even if Kraft Heinz dragged some of the performance down. With BM&R, if you're individually buying that, which is essentially Tom Lee's version of Berkshire Hathaway. I know it's not a holding company, but that's effectively what he's doing. He's raising money and then buying assets. In this case, the asset is centralized towards Ethereum. That shit doesn't work. You've just created a ton of backholders. I think that's the broader problem here. Waymo says they prepare for commercial launch next year in London. Okay, so Waymo teased that a couple of weeks ago. And it looks like that's what we got here. Siege says, to hell with Buffett. All we had to do was buy $1,000 worth of Bitcoin in 2009 and we'd be billionaires 5 years ago. Hold on, how much? Let's ask Gemini. If you bought 1,000 of Bitcoin in 2009, how much is it worth today? Is it actually $1 billion, $1,000? Hold on. Okay, well, yeah, it would be worth billions. Because in 2009, it was 0.001 cent. Yeah, if you bought it and held for 15 years, a $1,000 investment at 0.01 would get you around 1 million Bitcoin. Bitcoin's price in late 2009 was 0.0099. Let's say you got it in 2010 and you had to pay a couple cents, not fractions of a cent. You still would be pretty happy if you held. I mean, why did you tell us about Bitcoin in 2009? What was I doing in 2009? I was 12 years old. All right, everyone put in the chat. What was their life about in 2009? I was in 6th grade. Yeah, 6th grade. Michael Jackson had died. That got me into a rabbit hole of learning about his life. I performed Billie Jean at the talent show in 2009 because I was that inspired by Michael Jackson. Yeah, I was 12 years old. I was on YouTube watching like Michael Jackson music videos from the 90s. Like, realistic, dude, like 2000, again, Michael Jackson was a big deal for me when he died. Like, it really did change my life. And I think it kind of gave me that whole appeal of wanting to be a performer one day. I should have been trying to read the Bitcoin white paper. That came out in 2008, right? The peer-to-peer Satoshi paper. I think that was 2008. I was playing RuneScape. I was 16, 4 years out of college, working in New York, entering teenage years. I was 7. I was playing Call of Duty. RuneScape with the lads. Working as a designer at Levi's. I was getting high in 9th grade. So we all needed to pay attention to freaking Bitcoin. But we didn't. Oh, sorry, it's RuneScape, not RuneScape, right? It's RuneScape. Sorry. I thought it was RuneScape. I have heard that before. It's just when I saw it immediately, I said RuneScape. That wasn't even a troll. I've heard about the game RuneScape before. I don't know what the game is about, but I've heard about it. I meant to say RuneScape, not RuneScape. That feels like I'm trolling. I genuinely just saw it, and I forgot there was an E there, and I said RuneScape. I've never played it. I've never really played. The only game I played was Grand Theft Auto, but that was like when I was like really young. And I haven't played Grand Theft Auto 5. RuneScape. I was paying my mortgage. Doug says I was stalking my future wife on Facebook. Oh, I forgot 2009 is when I got on Facebook too. I remember you could send a poke to a girl you liked. I remember that. Yeah, 2009. That was when I remember that was like December 2009. Facebook was really, that's the social network came out in 2010. Dude, Facebook was crazy because I mean, now I don't use it, but man, when it was scaling, when it was doing its thing, it was, I mean, there's just tens of millions of people a day that were joining that platform. It was kind of wild. They still have the poke. Dude, if you poke someone on Facebook today, I feel like it was just creepy. Like poking in 2009 was basically saying, hey, I like you. Dude, and I was on Facebook. Like I was like years of just like, I was on it. Like there was every new feature they had, I was trying it out. Like I was the guinea pig for using Facebook. But then you get older and you kind of just grew out of it. Farmville, yep. That was a big thing at the time. Did you see Steve say Michael Jackson is not a top 25 artist? Steve's opinion on this is relevant. He hasn't really listened to Michael Jackson. Like, he can talk about movies all he wants, but he's barely listened to. He can't name 5 Michael Jackson songs, which is surprising to me because he grew up around the time where MJ was MJ. So it's quite incredible that. And he was in New York. It's like, MJ was a big deal. So it's weird to me that he doesn't know that much about him. I was just starting high school. Yeah, I was just in the mid. I just started middle school, 6th grade. That was quite the time in 2009. Interstellar wasn't on their best movies list last night. Of course. Like these guys don't. Steve thinks he knows movies. He doesn't actually know movies. He acts like he's some savant when it comes to movies. Like, no, dude. If you can't put Interstellar in your top 25, I don't want to listen to your opinion, to be honest. So you can tell him I said that, by the way. Let him know. I'll tell that to his face tonight on the New Year's Eve stream. Not having freaking Interstellar in your top 25. Spy, are we still red? Yeah, we're still red. All right, what else? Do we have any other headlines? Do we have anything? It's 11:09. Do we have anything? Really? It was dead at the end of the year. That's it. We just had a nothing market last week. Let's get a little bit of coverage here, but this is how we ending out the year.
60% this year.
Well, that was the most interesting thing about this year is that the markets widened the lens of investment opportunities. After 2024, we're coming into this year when it was just 7 stocks, and people realized, hey, not only is there more stocks to buy in the US, but globally. International markets have had a big year. We've been exposed to that. The Spanish stock market in dollar terms is up more than 50% this year. The Italian stock market up more than 40% this year. Precious metals, of course, gold, silver, which, full disclosure, we have trimmed a bit here on this rally, particularly the moves that have gone parabolic, platinum and palladium as well. And I do think that this trend can last into next year.
What's the driver of it?
One interesting thing that tells me that the dollar weakness is going to be a story also next year is what's happening with the Chinese yuan. Chinese yuan now is at a multi-year high. It seems that the authorities there are becoming more tolerant of that appreciation, which then can drag up other Asian currencies and continuously put pressure on the US dollar, which makes non-dollar assets still attractive, both in equities and in bonds. I'm particularly bullish on local currency emerging market bonds that I think can benefit both from a good yield and also a further weakness in the dollar.
You think that's been the story with gold and silver too, and that can continue after such a strong run up?
It's part of the story, but with gold in particular, central banks that just keep buying a voracious amount of it.
So what else is interesting to you into 26?
So on that commodity theme, to me, the most compelling and one of the cheapest assets in the world is a barrel of oil at just below $60 in WTI. The bearishness is clear.
You agree? Is 2026 a good year for oil? If it is, it's not necessarily the best year for gas prices. So there's a bit of conflict there if oil does go higher.
Everyone talks about a swimming in oil, slack demand, all this supply, and I see this actually reversing. I think demand has been pretty good. I think U.S. supply potentially can fall in 2026 in terms of production, and I think that these stocks are very cheap, and certainly on an inflation-adjusted basis, oil is extraordinarily cheap. The other sector that I find very cheap, and something that you cover, consumer staples, that have had a terrible year, that are all trading now with very cheap valuations, with very generous dividends, where you can get some equity-like upside, but with bond-like dividends.
Why? What do you think is the catalyst that drives these stocks and changes the direction? Because volumes have been light. I mean, they haven't really seen any big blockbuster innovation in some of these food companies and beverage companies.
Yeah, it's been a bad story. Margins have gotten hit. They've been losing pricing power, particularly after the sharp rise in their costs. But I think a lot of them are right-sizing their businesses. I think a lot of them are looking at asset sales to more concentrate their businesses, like take Conagra last year, which sold Chef Boyardee. I think everyone's trying to narrow, and they're trying to create better products, better tasting products, healthier products that I think would widen their audience.
I mean, I'm curious about your concerns for next year. I wonder if they extend to the likes of a lot of our economic growth is dependent on the building of data centers and everything involved with that.
So I think the bell has rung on the AI tech trade in terms of its dominance. And we watch to see if that bleeds over in terms of the actual construction of these data centers. When I saw Oracle after their September quarter spike up and come right back down, followed through with their quarter they just announced, when I saw CoreWeave fall the way that it did, when I saw Meta get punished, not because they had a phenomenal quarter, but they focused on the excessive spend, when I saw Broadcom sell off after their number, when I saw even Nvidia sell off after the number, it tells me that this trade has priced in a lot of this. And most importantly, the market is now differentiating between the winners and losers, realizing not everyone can win, not everyone can be successful. And I think that's going to be the story of 2026. The losers are going to get pulled out, and the winners will have to see to what extent. And OpenAI is the center of a lot of this. And whether they can raise all the money they need to raise, whether they can monetize what they're building out, that is going to be a key story also for not only the stock market because of the heavy concentration in these names, but as you said, the economic impact.
Yeah, and we've made this point many times, of course. It's a private company. It's harder to know exactly what is happening there. They do share certain things. We get certain reporting. But them and Anthropic and any number of other companies that are very important to this ecosystem are not sharing a lot of numbers with us.
But the tentacles reach so far that we're getting information on them from the public companies.
Without a doubt.
And their exposure to this private company.
Without a doubt.
The other thing that I think is going to be a story is long-term interest rates around the world, which while the 10-year yield has come in, it stayed very elevated and cannot ignore what's happening in JGB yields. You look
Japan,
at Europe
it's been higher.
and Japan.
They're raising rates.
I mean, the ECB has cut rates 200 basis points, and German and French long-term interest rates are multi-year highs. To me, this is a story if this rise in rates continues, irrespective of what the Fed does in the short end or what other central banks do.
They're
in the short end.
elevated.
I think so. There's a counter argument to everything he says about AI. There's an argument that supports everything he says about AI. There's a counter argument about everything he says about oil. There's an argument that could support it as well. And that is why I think 2026 is going to be so hard to call, because there's a lot of things he said that could very well play out outside of pronouncing Nvidia incorrectly. But there's also a lot of things that really could counter it. Now, the argument about long-term yields, that part still continues to confuse me. I mean, mortgage rate, guys, still at 6.3% across the country. Like, we've had 3 rate cuts and we are not seeing that 10-year come down, which is why we're not seeing mortgage rates come down. And he's right. Like, the same kind of dynamic is happening across the world where central banks are easing, the ECB with 200 bips, and their long end of the curve, long end bond yields are going higher. And that to me is signaling that either the bond market doesn't want to keep allocating to bonds, which it's a $300 trillion industry, so the money should be there to allocate, or they need more of an incentive, aka they're more afraid of inflation. And then on top of that, you potentially have government shutdown coming January 30th. So there's just a lot of dynamics. I don't think they're all intrinsically bearish. They're not all intrinsically bullish, because this is the 4th year of a bull market, which is why every single analyst is coming out and saying maybe there's like 7 to 8% return next year, and it's not going to be massive. But I think the culmination of that means that it will be a stock picker's market. Like, you're going to have to find gems, and you're going to have to bet on certain gems to make the year. Or we just go straight up to the moon, because AI really creates more use cases and the data centers keep exploding and this and that. Or we get a recession and unemployment spikes and even the rate cuts is not going to solve it. Like, there's various different ways I think you could see this going. Again, my base case is Fed easing, AI trade strong. We should have a bull market. But there are plenty of perspectives going in multiple directions. So we're going to see how this ends up playing out going into 2026. Nebius also has no exposure to OpenAI, and they got cut in half, so I'm not sure about that theory. Well, I think for it's not necessarily having exact exposure to OpenAI. I think it's just like, are you deemed as a play on data centers? And data centers, the biggest buyer of data centers, literally 1.4 trillion, is OpenAI. So if OpenAI can't come up with the money for all this data center spend, it's not that Nebius's projections of the 7 to 9 billion annual run rate, which is crazy given they're doing 300 million right now. Like, that's absolutely just phenomenal growth. It's not that those projections are wrong. It's just the market starts to wonder, what's the TAM for buying the stock and holding it for the next 10 years if the biggest customer can't spend the money? Which is why I think it indirectly and directly then gets associated in the bucket, even if, their projections have nothing to do with OpenAI. Now, CoreWeave has a lot more to do with OpenAI, so that one's more heavily affected. But we're going to have a lot of these themes that we have to explore going into the next year. Is silver still down? Silver, yeah, getting hit, 8%. This is the lowest it's been all morning, 7.97% down on silver. All right, folks, that is it for me. I will be back for the final close of 2025. I think I might have a couple of people join me. If not, it'll just be me. And nothing too crazy. We're going to close out the markets. We'll talk for a little bit. We'll go through my 2026 portfolio strategy, updates, ideas, concepts. You guys can share what you're thinking of next year. We'll do a final year to date, which unfortunately we're not getting a super big green day. So not really going to push our year to dates up massively, but we got a few hours left of this market. We'll see how it plays out. And then I'll be back with Steve at around 8:30 for New Year's Eve. So if you're staying home for New Year's Eve, get some good food, get some drinks, lock in. We'll be ready. We'll have fun. We're doing an NCAA S&P 500 stock market, not draft, but like competition. So we're taking the top 64 names in the S&P 500, and they're going head to head in a bracket. So that'll be fun. And I'm sure we'll talk about a bunch of other topics. Maybe Matt joins us, but it'll be me and Steve, and it'll be on his channel. It should be a good time going into the end of the year. All right, that's what we got. Word of the day, the last one for 2025. It's been crazy, dude. The last one for this year. Celerity. I was about to say Kellerity, but there's no way. It's celerity. Celerity. Swiftness of movement, action, or thought. He responded to change with celerity, moving fast but never recklessly and turning momentum into progress. Okay, how do you say this shit? Celerity.
Celerity.
Okay, whatever. Couldn't get the last one of the year correct. Did anyone really think it was celerity over celerity? Like the CELE doesn't look or sound like a SUH, but I guess it is. So
Celerity.
celerity, that is the final word of the day. Swiftness of movement, action, or thought. I mean, it's a fitting word of the day because that is what we've all had to engage in throughout the year. There were a variety of decisions we had to make, the biggest one being in April. You had to be quick. You had to, when Trump said buy the dip, you had to be ready to buy that dip. You had to not sell when things were the ugliest. And that likely defined the entirety of the year. My boy just can't read. Dude, I thought it was celerity. Other people think it's celerity, but I think it was celerity. All right, that's it. Thank you, everybody. Appreciate it. I'll see you guys. You pronounce it like a vegetable. Dude, I thought it was celery for a second. That's probably why. Another word to forget. We really need to make sense of these words because it goes in one ear, out the other. So yes, we need to do something that forces us to use these words of the day in a meaningful way. But I'll be back on the close. Not going to be too crazy. We'll just talk about what happened throughout the day, throughout 2025, preparing for 2026. And obviously, we'll talk a lot more about 2026 when we get in there. But we're going to start up the markets January 2nd, brand new year. And I'll be live with Steve for the New Year's Eve stream tonight and hope to see people there. All right. Thank you, everybody. If I don't see you throughout the rest of the day, have a great New Year's Eve. Enjoy it. Thank you all for joining every single day. We'll be back. We're not going to be live tomorrow, given it's New Year's. I'll be back on Friday morning and excited to see everybody in the new year. Thank you, everybody. Have a good one. I'll see you guys tonight. Bye, everyone.